Okay, in TDS, no, before you start TDS revision, okay, you come back to this particular timestamp once again after finishing TDS advanced tax revision. Once again come back to this timestamp. Now first listen, then proceed to TDS. Then after listening entire TDS revision, again come back to this. Okay, now what is this? There are section combinations you should remember. Section combinations: 194A, 194C, 194H, 194I, 194J, 194R, 206C. Okay, 206C subsection 1, 206C subsection 1F. In these 8 sections, these sections are applicable to the payer, to the seller, who is any person other than individual and HUF. In the preceding year, in case of individual and HUF, in preceding year, turnover is more than 1 crore in business, profession gross receipts are more than 50 lakh. Then only these 8 sections apply. First point. Then 194DA, you know, amendment. I am talking about amendment. Amendments are there in which sections I am talking about. Okay. 194DA, major amendments. I am talking about that too, major amendments. 194DA, 194G, 194H, 194M, okay, 194M, 194, this one more, IB. In all these sections, TDS rate up to 30th September 2024, this is most important amendment, 5%. From 1st October 2024, 2%. Are you clear? Then there is another section, another combination. What is that combination? This is important for theory question. Right now what I'm going to tell you. 194IA, 194IB, 194M. These sections are applicable, okay, even for personal expenses. And these sections, TAN number under 203A section do not apply. Clear? Then 206C, 1H and 194Q. These 2 sections are applicable only for buying of goods or seller of the goods. Which goods? Other than 206C subsection 1, 206C subsection 1F, 206C subsection 1G. Then there are 2 more sections where minor amendments happened. 194C, exclusion 194J they mentioned. Exclusion 194J, work do not include professional service given under 194J. Actually that is not required, but that's an amendment brought. 206C, yes or no? 1F, earlier it is applicable for motor vehicle where value exceeding 10 lakhs. But now notified goods are also added. Notified goods with effect from 1st January 2025. That's it. These are the amendments. 194C, 206C, 1F. Here amendment is there. You know, this entire category is amended. This entire category is what? Amended. Don't worry. In the TDS revision at respective places, I repeated these sections multiple times. You will understand better. Are you confident? Easy or not? Generally, you know, 206A, a high rate of TDS by the payer to the payee. If payee does not furnish PAN, 2 times of the section rate, 20%, whichever is higher. But 194Q, maximum TDS 5%. 206CC, yes or no? Higher rate of TCS by the seller from the buyer you should collect. At what rate? 2 times 5%, 1% for 206C, subsection 1H. That's it. All these points I covered in the respective section. That's it. As an intro I am giving you. Okay, clear, easy. Let's begin TDS, TCS and advanced tax revision. So first we will finish TDS related revision. Then we'll get back to advanced tax. See, generally in the basic concepts topic we might have, you know, what we understood is income is earned in the previous year. For that, computation of tax, assessment of tax, filing of return, payment of tax will be made in the next year, and that next year is called as assessment year. But department will collect tax in the income, tax on the income. They don't wait up to next year. They directly collect from you at the source itself. Suppose you are getting income, right? Somebody is paying you, right? From the somebody who is paying you, from there itself they will collect the tax belonging to you. And the person who is paying you, to the extent of tax, whatever he has to pay to department on behalf of you, will deduct the tax and then pay it to you. Getting it? Tax is collected in the same previous year when you are earning income. One in the form of TDS, another one in the form of advanced tax. Getting it? Through TDS they collect at some percentage. Through advance tax, they will collect the remaining amount. Literally, income tax department will collect entire your tax amount in the previous year itself without waiting up to assessment year. If at all you are having any pending tax liability in assessment year, still you are liable for interest under 234B. Yes or no? Fine. Anyhow, the 234BC will come back in advanced tax revision. Now, so TDS and TCS. What is the difference between TDS and TCS? TDS is tax deducted at source. TCS is tax collected at source. TCS is collected by seller from buyer. TDS is collected. TDS is deducted by payer while paying amount to payee. If you see, suppose payer, in seller and buyer, seller is actually payee, buyer is actually payer. TCS, payee will collect from payer. Technically, TDS, payee will deduct. No. Payer will deduct some money. Balance amount will be paid to the payee. This is also called as withholding of tax. We have already seen similar point for what is TDS in 40 subsection A, 140 subsection A, 1A. Most of the TDS provisions and TCS provisions are applicable to business assessees. Only few sections are there, like 194 IB, 194 IA, 194 M. Generally, these three sections, 194 N, cash withdrawal. Personal purpose also, TDS is liable. Able to understand? That's it. Fine. Anyhow, more about each and every section we'll discuss slowly one by one. So what is the difference between TDS and TCS? It might come for 3 or 4 marks question. Okay, a theory question might come. Directly, I will start with the sections in TDS. Then I will come back to this diagram. At last, I will come back to this diagram. What is the TDS mechanism? How TDS mechanism works exactly? That will discuss at last. First, let us discuss each and every TDS section. 192 TDS on salary. Like in this chapter, many of you will have a confusion. Like some sections, they say TDS at the time of payment. Some sections say at the time of credit or at the time of payment, whichever is earlier. Simply in this diagram, what sections deals with at the time of payment only? TDS shall be deducted here at the time of payment only, whereas here at the time of credit or payment, whichever is earlier. Credit means what? Recognizing expenditure in the books. See, for the payer, that's an expenditure. Amount paid is an expenditure for the payer. Now for the payer, whatever amount he is paying, it's an expenditure for him. That amount will be deducted. Sorry, that amount will be recognized in books rate expenditure. Suppose if at all I am recognizing on accrual basis expenditure, but not yet paid at the time of recognition itself, TDS adjustment, TDS deduction must be made in the books of accounts, and that must be remitted to the department. So in all these sections, at the time of recognizing in the books of accounts the liability or payment, whichever is earlier, so at that time TDS has to be deducted. Whereas in all these sections, when you are recognizing in books of accounts the expenditure or liability, doesn't matter. Only at the time of payment you will deduct TDS. That's it. Now 192. Getting it? At the end of the TDS chapter, once I will revise that payment to credit, all that. Okay, how to remember that sections easily. 192, employer, employee. Employee may be resident or non-resident. In our entire TDS provisions, recipient shall only be resident. Generally, if at all we are paying any amount to non-resident related TDS provisions are discussed under 195, which we don't have in CA inter syllabus. It's there only in the CA final. Payment to residents. Only few payments, like 192 salary, 194B, BB, BA, all these billings, the payment can be made to a resident or it can be to a non-resident also. Able to understand? So there only non-resident is also covered. Rest of all the sections, recipient to whom you are paying, payee must be resident. By the way, in TDS, the terminology is payer, payee, deductor, deductee. Whereas in TCS, the terminology is seller, buyer. Seller will collect a tax from buyer. That's it. Now, so here, who is paying it? Employer is paying. Employer is paying the salary to employee. Very simple. How to tax has to be collected? What is the threshold limit? Every section uniformly drafted like this. Getting it? So who is the payer? Who is the payee? What is the rate of TDS? What is the threshold? When it should be deducted? Then exemptions and additional conditions like that. Yes or no? First, under 192, employer has to ask employee regarding what is the tax regime they follow. First ask them. They will tell you normal or default. Suppose employee did not reply, we by default assume default tax regime. Correct? Now, in this section, what is the complexity? Employer has to identify, the company which is paying salary has to identify what is total income of employee. Identify total income. Suppose employee total income is 10 lakhs, sir. Exactly 10 lakhs total income. Total income means what? Gross total income minus chapter 6 deductions, which means company has to ask employee what are the salary incomes that he is getting from this company, other companies. Company has to ask the employee what is house property income he has. We should ask the employee what is capital gains income, all that. Ask gross total income information. Also ask him optional tax regime, then ask him chapter 6A details and all, then compute total income. Sir, like that I computed. Total income came 10 lakhs. Total tax liability including education cess is approximately 1,20,000 is coming. Now deduct it over 12 months. April month 10,000, May month 10,000, June month 10,000. Deduct it equally over 12 months. That is why they use the word average rate of tax. There is no specific percentage here because tax is calculated based on slab rates. Yes or no? So find out the estimated tax liability of the employee. Ask him TDS details, all that. After reducing that, balance tax, deduct it under 192. Able to understand. So employer will do estimation of tax liability and accordingly this amount will be collected. Sometimes, no, for example, no, this 10 lakhs if you see, you know, what is the total income 10 lakhs. How much is the tax liability? Actually 1.2 lakh. Out of this 10 lakhs, for example, 3 lakhs is a non-monetary perquisite, 9 lakhs is a monetary and monetary, non-monetary elements perquisite all put together. Now, company sometimes know what they do, you know, this 1.2 lakhs is the total tax, right? Company sometimes non-monetary perquisite related tax component, company will say they will bear it. The company will say they will bear. What? Non-monetary perquisite related tax. Now, sir, for 10 lakhs worth of salary, 1.2 lakhs, 1.2 lakh. This 10 lakhs, no, 3 lakhs is non-monetary, 9 lakhs is the others. Now, how much is for non-monetary perquisite? 1.2 into 3 by 10 is equal to how much? 30%? 36,000. Sorry, not 3. Here it is 7. Okay. Here it is 7. Sorry, it's a 7. Okay. So 3 by 10 non-monetary, 36,000. Balancing figure is how much actually? So 1.2, 84,000, correct? 84,000. Now, sir, out of 1.2, no, 36 lakhs is 36,000 is belonging to non-monetary perquisite related tax portion. This 84,000 is related to remaining total income. How do we compute the tax liability on non-monetary? By applying average rate of tax. For 10 lakhs, 1.2 lakh means 12% is the average rate of tax. 3 lakhs is the non-monetary perquisite value into 12% is equal to 36,000. That's why they use in this section average rate of tax. Average rate of tax. Now, what the company proposed, you know, the company said this 36,000 they will take care, they will pay. So from my salary every month, you know, from my salary in the full year, 84,000 only will be deducted. When the when they are paying me money, right, monthly salary, 84,000 will be deducted in full year by 12. Able to understand? So maybe 12 divided by 84 means 7,000 per month. 7,000 they will deduct from my salary every month. Now 36,000 company is paying, no, out of their own pocket. That's an expenditure for him, no. They can't claim deduction. Under PGBP 40 subsection A, this amount paid, amount of income tax paid by employer on the non-monetary perquisite of employee is actually a business expenditure for him, but he can't claim deduction because it's an income tax obligation. You can't claim deduction. For employee, my tax company is paying. That is also a benefit to me, but it is exempt under 10 subsection 10 CC. That's it. Remaining 84,000 will be deducted from employee every month. Are you clear? Now, you know, you need to ask some evidences for deductions because, you know, when we are computing total income of the employee, he gave me so many deductions details. You should collect evidences. For HRA, you know, to whom he is paying rent, landlord, name, owner name, PAN number, all that. If at all rent paid per annum is more than 1 lakh. Leave travel, expenditure of travel tickets, all that. Interest on house property, bank statement, bank name, all that. Chapter 6A, investment and expenditure related bills will be there, right? Those details are required. Sometimes this itself can be asked as a 3 marks question in the exam theory. That's it. 192 is over. Understood or not? Next, 192A. This is regarding premature withdrawal from provident fund. We all know in recognized provident fund, if at all you are withdrawing after 5 years of continuous service, fully exempt. Suppose if you are withdrawing within 5 years, then we will see why he is withdrawing. Because of ill health, because of discontinuance of the job, because company closed. If at all these are the 3 reasons, then also it is exempted. Other than these 3 reasons, you are withdrawing for some personal purpose, then fully taxable. Amount withdrawn is fully taxable. What is taxable? Employer contribution, interest on employer contribution, interest on employee contribution. These 3 components are taxable. The amount you withdrawn includes employee contribution also, but that is just your amount you are getting back. That is not taxable. You able to understand? This is the taxability. Suppose if the employee withdrawing PF, which is a taxable withdrawal, then if the withdrawal amount is more than 50,000 or more, the company straight away apply TDS at 10% on taxable portion. For example, employee withdrawn from provident fund 1 lakh. If you see the breakup of 1 lakh, no, 20,000 is employee contribution, remaining 80,000 is employer, interest on employer, interest on employee. Now since total withdrawal amount is 1 lakh, since crossed 50, section will apply. But when you are applying 10%, you will only apply on taxable portion, which is 10%, which is 8,000 rupees. Are you clear? Suppose if you are withdrawing, which is exempted, after 5 years of service, if you withdraw fully exempted, no TDS on that. That's it. Easy or not? Next, interest on securities. Who are paying? Anybody, every person who is paying interest on securities. Who will issue these securities? Either government, local authority, company, statutory corporation. Anybody can issue. They are paying interest on security. They need to deduct TDS at the time of paying the interest. If annual interest is okay, fine. TDS is deducted at what rate? 10%. To whom you are paying? Resident. When they should deduct TDS? At the time of recognizing in the books. Time of credit means recognizing in the books, or time of payment, whichever is earlier. Now, time of credit. Credit in the books means what? Recognizing liability. Whether you recognize liability saying interest expenditure, whether you recognize liability with some suspense account, which name you are using for the liability doesn't matter. You recognize liability, right? That's enough. You need to deduct TDS under some section. Are you clear? Next, there are what is the threshold limits, or what are the exemptions under these sections? Some interest payment paid, some interest payment on securities, that is exempted. No TDS will apply. No TDS. Remember, it is about no TDS. It's not about exemption of that income for the recipient. For the recipient, the incomes are taxable or incomes are exempted as per our exemption rules, taxability rules. This here I'm talking about. Here when I say exemption, TDS is exempted on that. That's it. Now, interest payable on debentures by widely held company. If a widely held company is paying interest on what? Debentures. To whom they are paying? Individuals and HUF. Then threshold limit is 5,000 rupees. Up to 5,000 rupees per annum. The threshold limit is what? In a financial year. If a widely held company means what? Listed companies, generally. Listed companies, government corporations, all that. Public interest entities. We call them as what? Public interest entities. Getting it? If these companies are paying any interest, up to 5,000 to individual and HUF, up to 5,000 no TDS. Suppose if the amount is crossing 5,000 a year, on full amount of interest, 10% TDS will apply. Yes or no? Remember, the exemption is given only for widely held company. Suppose if a closely held company, a private limited company is paying interest, unlisted public company is paying interest to individual or HUF, 5,000 limit is also not there. Full amount, even 1,000 rupees interest is liable for TDS. Yes or no? Suppose interest is paid by widely held company only, but to a partnership firm, to an LLP, to a company they are paying, then no threshold limit. Even from 1,000 rupees onwards, you need to collect, you need to deduct TDS. Yes or no? Suppose interest amount is paid on securities, but the securities are owned by insurance company and any other insurer. Any other insurer means what? Simple insurance company. Any insurance, private, public, government, doesn't matter. Insurance companies are the owners for the securities. On those securities, the issuer company paying interest, no TDS will apply. Are you clear? Interest on securities of government. Interest on securities of government straight away exempt. However, 8% saving bond, 7.75% taxable saving bonds, floating rate saving bonds. This is newly added as the amendment in the newly recent Finance Act. For the first time, May 25 exams only this is applicable. So, on floating rate savings bonds, annual interest, if it is more than 10,000 only, TDS. Only for these 3 interest only 10,000 threshold limit is applicable. Suppose if interest is paid by government securities, if the interest is paid on government, no need to deduct TDS at all. Interest on government securities, no need to deduct TDS. But for these 3 bonds, but for these 3 types of bonds where annual interest is exceeding 10,000, then only TDS will apply. At what rate? 10%. Next, if interest is paid on national development bonds, no TDS. Interest paid on national savings certificates, no TDS. Interest paid on debentures issued by, some institute or authority or society. Which society? Cooperative Land Mortgage Bank, Cooperative Land Development Bank. If they are paying any interest, no TDS. Interest paid on Power Financial Corporation capital gain bonds. Interest paid on IRFC capital gain bonds, no TDS will apply. But you see, Rural Electrification Corporation is not covered here. Able to understand? Yes, that's it. So simply, what is the takeaway? TDS at 10% will apply if annual interest payable to individual HF is exceeding 5,000 on debentures issued by widely held company. On interest payable by closely held company, straight 10% without limit. Interest payable on government bonds if annual interest is exceeding taxable government bonds. That's why I use the word very clearly. Taxable. What are the taxable government bonds? 8% taxable savings bonds. 7.75 taxable floating rate bonds. 2020. Yes or no? That's it. Only on them TDS will apply. That too if the annual interest payable exceeds 10,000. Then TDS will be deducted at what rate? 10%. That's it. 193 over. Clear? Next, 194. Okay, 194 I'll come back to it. 194A I will discuss, because 194A also talks about interest only. But other than interest on securities, then what interest? Interest on loans, interest on borrowings, interest on public deposits, interest on fixed deposits, recurring deposits accepted by the bank or post office. Simple. You are paying interest on what? Some loan you borrowed, some borrowing, some deposits, whatever you are paying interest on that. Then TDS will apply. At what rate? Same 10%. But this section is this section is applicable only for any person other than individual and HUF. This section is applicable for any person other than an individual HUF. But what about individual and HUF? For them this section apply only if turnover from business is exceeding 1 crore in preceding financial year, or gross receipts are exceeding 50 lakh in preceding financial year. If their turnover or gross receipts are exceeding 1 crore, exceeding 50 lakhs in the preceding financial year, then only for individual and HF it is applicable. This applicability limit is same. This applicability limit is same in these sections: 194A, 194C, 194H, 194I, 194J, 194R, 206C subsection 1, 206C subsection 1F. Yes or no? For 206C1, 206C1F, in all these sections, TCS section also you see seller definition. You see TCS open and see just right now. TCS section open and see seller definition, second page of the TCS topic. Yes or no? 206C subsection 1 covered. Seller of timber, seller of forest produce, seller of scrap. Yes or no? 206C 1F, seller of motor vehicle, correct? Or notified goods. So for these 8 sections, payer means same definition. Payer means same definition. These 8 sections are applicable to the same category of SSE. Which SSE? Any person, whoever is paying these 8 types of payments, for them only TDS will apply. Individuals and HUFs, these 8 sections will apply only if business turnover is exceeding 1 crore in the last year. Or in case of profession, gross receipts are exceeding more than 50 lakh in the last year. Many students here misinterpret. Last year, if at all they are having audit, this section is applicable. No, it's not audit. They never use the word audit. Turnover more than 1 crore, this section apply. Turnover more than 50 lakh, this section apply. Whether they are going for audit or not doesn't matter. Yes or no? Next. Who is paying? Obviously, you are paying to resident. Now, there are exemptions under this section. There are exemptions under this section. Like if you are paying the following interest, no, you don't have to deduct TDS at all. For example, on savings deposit, you don't have to deduct TDS. By banking company, savings deposit interest paid by banking company, no need to deduct. Post office related point, they are silent. The section is silent on post office savings interest. But we will apply the same logic, and post office also they don't deduct in reality. Are you getting it? Then interest creditor are paid by a firm to its partners. If a partnership firm is paying interest to partners, no TDS under 194A. But there is another section called 194T. In 40 subsection B, we have seen. As per 194T, new section which is added, which is not there in our TDS chapter, but is there in our 40B PGBP. Yes or no? As per 194T, if annual amount paid to partner by the partnership firm, remuneration, interest, that and all doesn't matter. If the firm is paying to partners, yeah, they are paying. Firm is paying to partners. Yes, they are paying. Interest on capital, interest on loan, remuneration, something they are paying. Is it more than 20,000? Yes, straight away 10% TDS apply under 194T. So if an interest is paid by a firm to partner, 194A does not apply, but 194T will apply. Yes or no? No TDS for deposit schemes of central government. Yes or no? Next, no TDS if at all you are paying interest to banks, society, LIC, insurance company, unit trust of India notified. No TDS on interest on compensation paid by insurance company under motor accident claim tribunal. If insurance company is paying interest on compensation, because of the compensation is awarded under motor accident claim tribunal. Suppose if the insurance company is just recognizing in the books, interest expenditure, they recognize it in books only, no TDS. But they are paying, yes, TDS apply. Threshold limit is 50,000. Up to 50,000, no TDS. But if it crosses 50,000, straight away on the entire amount, TDS will apply at what rate? 10%. Zero coupon bonds, no TDS. Any other notified, no TDS. Now let's discuss, interest paid by banks. Interest paid by banks, interest paid by societies we will discuss. Generally, sir, I am not a banker, sir. I am not a banker. I am an individual. I borrowed a loan from my friend or relative, sir. I am paying interest, sir. TDS applicable? Yes, if the amount is crossing 50,000. Actually, you see the section here, no interest, no TDS on interest. If aggregate amount in financial year does not exceed 5,000. If the payer is anybody, sir, the payer is a bank or the payer is a cooperative bank, then 40,000 is a threshold limit. Senior citizen, what is the threshold limit? 50,000. Yes or no? Now, sir, how this 40,000, 50,000 limit shall be computed? Is it per fixed deposit? By the way, banks and all has to deduct TDS only on only on time deposits. Time deposit means what? It may be fixed deposit or it may be recurring deposit, anything. Savings deposit is exempted, no TDS at all. Sir, a bank is paying in interest on time deposit or fixed deposit, sir, or recurring deposit. 40,000 is the threshold rate. Is it per deposit? Is it per FD? No. Is it per branch of the bank? No. Full bank. State Bank of India has 20,000 branches across India. I may be having in 10-20 branches, 1 lakh FD. All branches put together, how much interest they are paying me, you should see. Entire State Bank of India paying me how much interest, you see. If it is more than 40,000, TDS at 10% will apply on the entire amount. Suppose I am a senior citizen, recipient is a senior citizen, then bank will apply 50,000 threshold limit. Sir, bank does not have core banking solution. See, if core banking solution is there, full bank wise you should see. Others means what? Core banking solution is not there. Then branch wise we will see. Yes or no? Post offices also has to deduct TDS on notified schemes. Only for these schemes, if the interest amount paid by them exceed 40, 10%. Otherwise, 50,000. Yes or no? Suppose interest is paid by some other person, sir, 5,000. This is the threshold limit. Now, the most confusing part in this section, I simplified it here. Sir, interest paid by cooperative society. Interest paid by cooperative society. Many institute book is very confusing. Many books are very confusing. This is simplest way. Interest is paid by whom? Cooperative society. Which cooperative society, sir? Not a cooperative bank, because cooperative bank is covered here. Cooperative bank is covered here. Other than cooperative bank, a society is paying interest, sir, on loans borrowed, deposits taken by them. Okay, which society? Sir, society is there, right? Their turnover does not exceed 50 crore in the last year. Their turnover does not exceed 50 crore in the last year. Look, 194A, applicability to cooperative society. If a society whose turnover in the last year is not exceeding 50 crore, then interest paid to member, interest paid to another society, interest paid by primary agriculture cooperative society, primary credit society, cooperative land mortgage bank, cooperative land development bank. No TDS, no TDS, no TDS. And finally, if a cooperative bank is paying saving interest, no, then also no TDS. Yes or no? Sir, I am a cooperative society, sir, where my turnover is exceeding 50 crore in the last year. All these exemptions will not apply. If annual interest is exceeding 40, flat 10%. Senior citizen, you are paying 50,000 is the threshold limit. Cooperative society are the liable for deducting TDS. Look at the last year turnover, more than 50 crore, no exemptions. Straight away 40,000, 50,000 threshold limits. However, savings interest is always exempted from TDS. Now, coming to, sir, I am a society, sir. last year my turnover is less than 50, then 3 types of payments I am exempted. Interest paid to member is exempted, interest paid to another society is exempted, interest paid by primary agriculture society, primary credit society, that and all exempted. Able to understand? By the way, when I say cooperative society, I am talking about other than cooperative banks. Are you clear? So simplest way you can understand, no confusion at all. 194A is completed. Easy or not? All of you? Now we'll go back to 194, TDS on dividends. Remember, there is another section called 194K, units of mutual funds. Income on units of mutual fund. Suppose I bought shares and securities of a company. On that I am getting dividend. Which shares? Equity, preference, whatever. Which dividend? Final dividend, interim dividend, deemed dividend also. Remember, deemed dividend is also covered. Yes or no? If at all I am getting dividend on shares, 194E section is applicable. If a company is paying, mutual fund company is paying income to unit holders on mutual fund units, 194K is applicable. In both the sections, threshold limit is 5,000 per year. In both the sections, 10% is the TDS rate on dividend. Yes or no? When they should deduct TDS? Earlier of payment or distribution of dividend. There also it is earlier of payment or distribution of income to unit holders. Yes or no? 194K. 2 sections I am completing simultaneously. Who should deduct? Principal officer, resident shareholder, 5,000. That too, if the shareholder is individual only. That too, payment is made by other than. No threshold in other cases. No threshold means what? Suppose if the company is paying dividend to another company, no TDS. Suppose if a subsidiary company declared dividend, holding company is getting dividend on full amount, even if it is 1,000 rupees, TDS has to be deducted at what rate? 10%. That's it. 194 is over. Easy or not? All of you? Then winnings. 194B. Winnings related totally 3 sections are there. 194B, 194BB. Both these sections are very similar. 194BA slightly different. 194BA is what? Suppose I am getting winnings from online games. How I do online games? Generally, I will install the app in my phone or laptop and I will add some deposit amount. Then I will start playing the online game. Then I will be getting some winning. Yes or no? Some games I will be losing. Some game I will be winning. So amount will be credited to the online. Yes or no? Now, how much is the TDS? 30% on the net winnings in the user account. What do you mean by net winnings? Gross winning identify. Total balance in the ledger account you see. Balance how much you see? From that minus deposit amount you reduce. The balance is called as what? Net winnings. On the net winnings, how much TDS will apply? 30%. When you will? At the time of payment. When the TDS will be deducted? At the time of withdrawal from the ledger. Withdrawal from the ledger, TDS will be deducted at the time of withdrawal. Sir, during the year I am not withdrawing at all. I just keep that amount as it is like that. Then year end, TDS will be deducted at the end of the financial year. March month they will deduct the TDS. If at all you didn't withdraw, on the winnings portion, 30% TDS will be deducted at the year end. Easy or not? Yes or no? There is no threshold limit here. There is no threshold limit. Winning amount 1,000, 30% TDS will apply. Sir, what if winnings is in kind? How TDS will apply? If the winnings amount is not cash, the winning amount is kind. Car we are giving. Car value 10 lakhs. Yes or no? That's the winning amount. How should I deduct TDS? You can't deduct TDS in kind. Therefore, ask the recipient. Winner is there, right? Winner no should pay 3 lakhs. 10 lakhs is the value of the car. Then into 30% TDS. Ask him to pay 3 lakhs to department as advance tax. Ask him to pay 3 lakhs as advance tax. Take the challan. Then release the car. Are you getting it? Suppose if the winnings which is in kind or cash and kind, but cash portion is not sufficient to cover TDS amount, then winner has to pay the pending amount through challan as it advance tax of the department, and the challan proof has to be given to the the person who is releasing the winning. That's how TDS. MCQ is there. Getting it? How MCQ? Option A, the company has to collect from the winner money, TDS money, and then deposit. That's wrong. The company has to ensure winner paid the tax to the department directly, advance tax in the form of, yes or no. The challan details you should take. That's how the section is drafted. MCQ, especially this logic is very important for the purpose of MCQ. Are you clear? That's it. Now, sir, I am getting some winning, sir, but other than online game, other than horse races, See, winnings are again broadly classified into two types. Any winnings other than online and horse race and horse race. In both the cases, what is the TDS rate? 30%. At the time of payment only. In the both the cases, at the time of payment only. Rate of TDS, 30%. For horse races, you have a separate 10,000 threshold limit in a year. For remaining winnings, you have a separate 10,000 threshold limit in a year. If the amount is crossing 10,000 on full amount, 30% TDS. Clear? Easy. There is no much complication in B and BB. BA is only somewhat confusing, which I told you now clearly. What is net winning? All that I clearly told. Next, 194C. 194C is for what? Again, applicability. 194C is applicable for which SSC? 8 sections I told. 8 sections are applicable only to any person other than individual and HUF. For individual and HUF, turnover in the last year more than 1 crore, profession gross receipts are more than 50 lakh, then only this section is applicable. What payment is covered under 194C? Under 194C, contract payment is covered. Payment to contractors is covered. Okay, I am paying to contractor for what? For work, for carrying out work. Don't use the word works contract. Works contract is a legal term, that is different. I am paying for carrying out work, not works contract. Yes or no? So we had a contract between me and another person have a contract. He is doing some work for me. For that work reason I am paying him. Able to understand what is work? Work means what? Supply of labor for carrying out work. Suppose if at all they are supplying professional and technical people, for example, then 194J technical service, that comes under 194J technical service. If at all the contractor he is supplying me professional people and technical people, not labors, then it comes under technical service, provisioning of technical and professional personnel. Yes or no? They come under 194J, fees for technical service, that comes under. Getting it? For technical service fee, 2% TDS under 194J. Here you are paying amount for carrying out work. Carrying out work means what? Supplying labor for work purpose. Advertising, it comes under carrying out. Broadcasting and telecasting with production specification. Remember, broadcasting, telecasting alone is not covered. With the production is covered. Suppose I am paying some amount to a company where they do broadcasting and telecasting. They take care of broadcasting, telecasting, production also they take care. Production of ad as per my specification. I will tell them how the ad should be. They will design the ad according to my specification. Means they are carrying out some work. The amount paid is for the work, and they are doing telecasting, broadcasting. The TDS will apply under 194C. Suppose I designed ad completely. With some ad agency. Okay, I designed complete ad. Just I gave the ad to the television company to play it. Just broadcasting, telecasting they should do. Nothing else. 194C section will not apply. Are you clear? All of you. Same way, ad agency will pay to television company. Suppose I went to one ad agency for advertisement. They designed the ad. I paid them 10 crore lump sum money for telecasting, broadcasting, designing of the ad. Now this ad agency is paying 5 crore to television company for telecasting. Now ad agency is paid to television company for telecasting. No. Ad agency designed the ad. Television company is just telecasting the ad. What work they are doing? So no TDS on that under 194C. No TDS under other sections also. Are you clear? Now, ad agency for designing the ad, they hire film artists and all. For them they pay. That is liable for 194J. Are you getting it? Because film artist comes under profession. That's it. Then, what is work includes? Work includes, supply of labor, advertising, broadcasting and telecasting, which includes production purpose, production specifications, carriage of goods, transportation service is also covered under works contract. Sorry. Transportation service also comes under work other than railways. Yes or no? Transportation is also work, remember. Catering is also work, remember. Manufacturing or supplying. Suppose I supplied material, I supplied paper to my vendor. And I asked him to please print and then give me. Printing service comes under 194C. Printing service comes under what? 194C. Printing of papers comes under 194. Suppose I supplied, papers to the supplier and he is just printing the content as per my specification and then giving me back. Printing work he is carrying out, right? That comes under manufacture and supply. Yes or no? Manufacture and supply of a product based on customer specification using materials provided by customer. Material I only gave, what to do also specification I only gave. He just have to work on it and then give back. That is called work. Suppose no, he is only buying the paper, he is only printing everything, and then he is just supplying me as a sale of books, then that comes under sale of books. It will not come under work. Able to understand? Printing service generally comes under work. If at all paper is supplied by the buyer, paper is supplied by the service receiver. Able to understand? So clarification, printing point also you remember. In sometimes in exam, printing also will be given as an example. Are you clear? Next, exclusions. Professional services under 194J. This is newly added in the Finance Act 2024 amendment. Earlier, even if this point is not there, we do the same only. Now, specifically the section says 194J is not covered under 194J. Services will not come under 194C. Then professional services, yes or no? Then contracts which are purely sale of goods. Like, I ordered some books. They only bought the paper. They only printed everything. Yes or no? So they just gave me. Maybe specification I'll give. That doesn't matter. At the end of the day, material is owned by them. Yes or no? That comes under sale of goods. On sale of goods, 194C will not apply because he didn't carry work on my material. He should do some work on my material. Transporter on my material is carrying. Yes or no? Telecasting, broadcasting, my advertisement they are doing. Yes or no? Some work they are doing. That's why 194C will apply. Able to understand? Then I have given regarding broadcasting, telecasting. All that I have already we discussed in production house. Entire this issue be discussed in our classroom. Okay. Next, now when TDS has to be deducted, if the amount is paid to a resident contractor, at what rate? Individual and HUF. If the contractor, the person who is doing work for me, if at all he is an individual HUF, 1%. Suppose if the work is carried by some other person, then 2%. So partnership firm, LLP, AOP, BOI, company contractors, 2% directly. Yes or no? Sir, pay, he is a transporter, sir. And he is a small transporter as referred under 44 AE. Who is a small transporter? A transporter involved in plying, hiring, leasing of goods carriage vehicle, and the number of vehicles at any point of time during the financial year does not exceed 10. So he is called as a small transporter. He must give a PAN number and he must give a declaration that he is a small transporter. If at all he gave a PAN number and gave a self declaration that I am a small transporter, whatever amount I am paying him for transportation, which is a work actually, whatever amount I paid, not subject to TDS. Are you getting it? That's it. Now, threshold limit. When TDS will be deducted? If the single payment is exceeding 30,000, TDS will apply. The single payment is less than 30. But yearly payment is crossing 1 lakh. Yearly payment, April to March, full amount paid is crossing 1 lakh. Then the moment it cross 1 lakh, right, total payment, that time retrospectively on total amount, 2%, 1% will apply and you will deduct. Are you getting it? For example, I paid in quarter 1, I paid 40,000. Sorry, quarter 1, I paid 28,000. In quarter 2, I paid 29,000. In quarter 3, I paid 25,000. In quarter 4, no, I paid 31,000. But you see, total amount is crossed 1 lakh. Now in the quarter 4, how much you paid? 28 plus 29, almost 57. 57, 62, 82, 82 plus 31. 1 lakh 13,000. Correct? So when you pay fourth money, fourth time, it not only crossed 30, total amount also crossed 1 lakh. Therefore, on entire 1 lakh 13,000, 1% or 2% TDS will apply. So if it is 1%, 1,130. If it is 2%, 1,260. This amount you will deduct from last 31,000 and balance only you will pay. That's it. Yes or no? Now exemptions. Under contract, if at all individual or HUF is making for personal purpose contract, if at all I am doing interior renovation work purpose in my residential house, that's a personal expenditure. Personal expenditure is not covered under 194C, but personal expenditure is covered under 194M if the personal expenditure in that year is exceeding 50 lakh to a single person. Yes or no? Fine. Anyhow, 194M I will discuss later. Clear? 194C is over. Easy or not? Next, 194D. 194D, insurance commission. There are 3 sections which are dealing with the commission: 194D, 194G, 194H. Whereas G and H has an amendment which is applicable for the May 25 exam for the first time. May 2024 exam, this is applicable for the first time. Again, at the end of this class, once again I will do full revision, full amendments related. Okay, fine. So 194D, insurance commission. 194G, lottery commission. Commission paid to lottery dealer. 194H, any other commission or brokerage paid who are dealing in goods and services. Yes or no? For example, I am buying a movable property. A broker is there. He is asking some brokerage that is covered under 194H. Now 194D insurance commission. Suppose if the person, I am paying insurance commission, okay, I am a dealer with insurance company, or I may be insurance company. I am paying to whom? Insurance agent. What am I paying? Insurance commission I am paying. Yearly, if the amount is exceeding 15,000, if the yearly commission is exceeding 15,000 insurance, you know, this threshold limit is same in 194G also. The limit is same in 194H also. Suppose I am paying insurance commission, 15,000 limit applicable. To the same person I am paying lottery commission. Again separate 15,000 limit is applicable. I am paying some other commission. All other commissions put together, maximum limit in a year is 15,000. Able to understand. So yearly threshold is what? 15. Suppose if it 15,000 it crossed. And obviously recipient must be resident. If at all the recipient is a non-corporate, not a company, then 5%. Suppose if the recipient is a domestic company, then 10% TDS. Are you clear? Only for insurance commission 5 and 10 logic is applicable. Whereas remaining commission 194D, 194G, 5% TDS up to 30th September. From 1st October it is 2% TDS. Yes or no? Fine. Let me discuss 194G also now. What is 194G? There are these sections. I think 5 sections we have. 194G, 194H, 194M. 194M also the same, no? Yeah, 194M, more than 50 lakh, 5%, with effect from 1st October it is 2%. Yes or no? 194IB, yes or no? Rent more than 50,000. Then 194 DA, yeah. DA is also, yes. 194 DA. In these 5 sections, remember, in these 5 sections there is an amendment. In these 5 sections there is an amendment which is applicable for the May 25 for the first time. In all these 5 sections, no, the amount you are paying, right? What is 194 DA? Maturity amount in the insurance policy. 194G is what? Commission to lottery agent. 194H is what? Any commission or brokerage which is not covered under 194D, which is not covered under 194G. 194M is what? Payment for work, payment of professional fee, payment of brokerage or commission for personal purposes, more than 50 lakh in a year. 194M, 194IB, payment of rent more than 50,000 per month in a month. Yes or no? In all these sections, no, up to 30th September, 5% TDS applicable. From 1st October 2024 up to 30th September 2024, 5%. From 1st October, 2%. In all these 5 sections, 5% TDS up to 30th September 2024. From 1st October 2024, 2% TDS. Clear or not? Now, what is 194G? Same. Yearly threshold limit is 15,000. Amount of commission paid to lottery seller for sale of lottery tickets. Rate of TDS up to 30th September related commission amount 5%. From 1st October commission amount 2%. Are you clear? Yes or no? That's it. Then 194H. Any other commission but not insurance related commission, lottery related commission. And remember, 194H is applicable to same categories. Any person other than individual HUF. Individual and HUF, if the business turnover is more than 1 crore, profession receipts are more than 50 lakh. Yes. So how much is the TDS? 5% if the commission is payable up to 30th September. 2% if the commission is paid on or after 1st October. Yes or no? Next, you know, what do you mean by commission? Amount is received by one person on behalf of another for services rendered other than professional services, for any other services of buying or selling, or for some transactions related to assets, immovable properties, whatever. Yes or no? Remember, professional services, no, which are covered under 194J, they do not come under 194H. No TDS on commission paid by BSNL. Advertising related, no TDS at all under section 194H. Correct? Now, fees retained by advertising company from media house. I think this is not required. In our regular class, we clearly discussed on this, but this is not required here. Okay. Payment for engaging models, photographs, artists are separate and they may attract TDS under 194J. Yes or no? That's it. 194H is also over. Threshold limit is what? 15,000. At the time of credit or payment, whichever is earlier. Clear. Commission point is over. Now we will discuss 194DA. What is 194DA? Insurance company is paying money under insurance policy. When insurance company will pay money under insurance policy, 3 circumstances. 1, yearly cashback might be there. Yearly cashback might be there. 2, maturity amount. 3, surrender of the policy. Simple. All these days you are paying premium to company. Now company is paying back your money. They should deduct TDS under 194DA if annual amount paid exceeds 1 lakh. If the annual amount paid is 1 lakh or more, the moment it touches 1 lakh, TDS will apply at what rate? If the amount is paid up to 30th September, 5% TDS. If the amount is paid from 1st October, 2% TDS. But there is one exemption. If the insurance company is releasing money to you, and that money which you are getting, for example, for you it is exempt under 10 subsection 10D. For example, the money received is exempt under 1010D. You are getting 10 lakhs, 20 lakhs, 30 lakhs, 40 lakhs. It doesn't matter. Fully exempted. That income itself is exempted. TDS will not apply. TDS will not apply on that. Are you getting it? Which means insurance company, when they should deduct a TDS on the insurance amount, only when the insurance amount is taxable for you under income from other sources under 56 subsection 2 clause 13. Yes or no? Only then they should deduct TDS, provided amount paid shall exceed 1 lakh. Suppose insurance company released money 90,000 only. That is taxable for you. 1010D exemption does not apply. TDS will not apply because the amount is not exceeding 1 lakh. Amount is less than 1 lakh. If the amount is touching 1 lakh or more than 1 lakh, both are liable. At the time of payment, they should deduct the TDS. If the amount is paid before 30th September, 5% TDS. If the amount is paid on or after 1st October, 2% TDS. That's it. Are you clear? Next. 194G is over, 194H is over. Now 194I. In 194I, here just add one word, immovable property and furniture. What is that? Furniture. Getting it? Under 194I, you are paying rent for immovable property and furniture. TDS rate is 10%. You are paying rent for plant machinery equipment. TDS rate is 2%. I am paying what here? Rent. For what? Immovable property I am paying rent, or furniture I am paying rent. 10% TDS. Suppose I am paying rent on lease of machinery, lease of equipment, which is not immovable, which is not furniture. Then 2% is the TDS. By the way, remember GST component, because when I am paying rental amount, the other person might raise on me GST amount also, because rent is liable for GST, commercial renting. Yes or no? On the GST component, no need to deduct TDS. Not only here, in most of the sections, GST component, if it is shown separately in the invoice, on the GST component, we don't collect, we don't apply TDS provisions on GST component. Able to understand? Yes. Now, when TDS will be applied? If the rent amount per annum is more than 2,40,000 in a financial year, directly TDS will apply. For example, one company is there, they rented me immovable property, they also rented me plant and machinery. They are collecting 2 lakhs rent for plant and machinery, they are collecting 2 lakhs rent for immovable property. Both put together you should see, because you are paying to single person only, both of them. Both put together is 4 lakh, which is exceeding 2.5 lakh. TDS will apply. 194I section will apply. Now at what rate you should deduct? On immovable property portion, 10% is equal to 20,000, whereas on plant and machinery portion, 2% is equal to 4,000. So 20 plus 4, 24,000 is the TDS under 194I. Yes or no? Now who is paying this rent? Any person other than individual and HUF. In case of individual and HUF, this section will apply only if the turnover is exceeding 1 crore in a preceding financial, or gross receipts are exceeding 50 lakhs in preceding financial year. Remember, this applicability section is same for 8 sections. Once again, 194A, C, H, I, J, R, 206C subsection 1 TCS seller, 206C subsection 1F seller of motor vehicle or notified goods. Notified goods is newly added in the Finance Act latest. In these 8 sections, the person liable for TDS, the person liable for collecting TCS must be same. Any person other than individual and HUF will be liable only if the turnover in the preceding financial year is more than 1 crore. If gross receipts in the preceding financial year is exceeding 50 lakh. That's it. 194I section is mostly over. Correct? Now, sometimes farmers will be paying cooling charges to cold storages. That comes under work. 194C will apply. That is not treated as rent. Yes or no? Payment of passenger fee by airline is not considered as rent. One-time payment for long-term lease. I took an asset on lease. One time, single payment only. That is not covered under 194I. Are you clear? Now, if you see 194I do not apply to individual, do not apply to HUF if they don't have a business or profession, or they have a business or they have a profession, but the last year turnover is less than 1 crore, last year receipts are less than 50 lakh, then 194I does not apply. For them, 194IB is applicable, because IB section also dealing with rent amount only. IB section also dealing with what? Rent expenditure only. Now, what this IB section says? 194 IB section says very simple. I am an individual in HUF who is not covered under 194I. Then if you are paying rent, monthly rent is more than 50,000. Monthly rent is more than 50,000. Per month rent or part of rent. One day you took function hall on rent. 1 lakh you are paying. You are eligible. You are liable for 194 IB. If you are deducting TDS under 194 IB, TAN number is not required. 194 IA, 194 IB, 194 M. In these 3 sections, if you are deducting TDS, TAN number do not apply. TAN number do not apply. Yes or no? Remaining all other sections, if I have to deduct TDS or if I have to collect TCS, TAN number must be there for the deductor, for the payer, for the seller. Yes or no? No. Okay sir, I am paying monthly rent 50,000 cross it, sir. TDS will apply for that month. TDS will apply for that month. At what rate? If the monthly rent is belonging to up to September month, 5%. If the rent amount is belonging to October month onwards, then 2%. Yes or no? Then when you should deduct this TDS? TDS will be deducted from the rent paid for last month of the year. March month rent you will pay, right? From that month, in the 12 months, every month more than 50 identify. That many months multiplied by rent amount of that month. Yes or no? Into 5%, 2%, as the case may be. Apply that and then deduct TDS in March month. Sir, I am vacating property in January itself. Then in January month you should deduct the TDS. Suppose the person to whom I am paying the rent, no, he may be owner or he may be a sublessor. He may be a owner or sublessor. In 194 IB, I am paying rent, right? To whom I am paying? He need not be owner. He may be subleasing me, subletting me. Yes or no? Now, if at all the owner does not give me, or the person who rented me this, no, does not give me PAN number, then I will deduct TDS at 20%. We know very well. But that should not exceed last month rent. That should not exceed March month rent or last month of the tenancy rent. TDS shall not exceed that much. And we already solved a problem on this in the ICA book. Yes or no? That's it. So with this section is over. Clear or not? Next, 194 IA. You are buying immovable property. You are buying immovable property. On purchase of immovable property, whose consideration or whose stamp duty value on the date of registration, if nothing is mentioned, we should take registration stamp duty value. If at all it is exceeding 50 lakh, TDS will apply. If it is less than 50 lakh, TDS will not apply. Are you clear? At what rate? 1% of the consideration or stamp duty value if it is higher, whichever is higher. So either stamp duty or consideration, any one cross 50 lakhs enough. On that value, 1% TDS you will deduct and pay balance amount to the buyer of the immovable property. You are the seller of the immovable property. Yes or no? Sorry. You are buyer of the immovable property. You are the buyer of the immovable property. You are paying amount to seller. Deduct 1% and pay the balance amount to the seller. Correct? Yes or no? Next, remember there is one amendment. 1st October onwards, if multiple owners are there, multiple sellers, multiple buyers are there, for each seller and buyer 50 lakhs limit shall be applied. Property we should see. Property we should see. Property consideration how much? That you should see. Yes or no? Consideration is aggregated. They said aggregated means what? Single property value you should see. Yes or no? Joint owners may be multiple. That doesn't matter. Are you clear? Even TAN requirement does not apply for 194 IA. Remember, consideration must also include club membership fee, car parking fee, anything. Are you getting it? So when you are paying immovable property, you are buying a flat. In that flat cost is 40 lakhs. 15 lakhs amenities cost. That is also to be considered. Able to understand. 1% TDS. Clear or not? Now, when you are buying immovable property, I already told in gift provision. Yes or no? You are a buyer of immovable property. If it is inadequate consideration, gift provision might apply. For seller, capital gains provision might apply for him if it is a capital asset. For the seller, if it is a stock in trade for him, the building which he is selling, then PGBP 43CA will logic also will apply. Accordingly, 43CA, 50C, 194 IA, all these sections, 56 subsection to clause 10, gift, everything you should apply cumulatively and then take. In exam, sometimes they will ask you buyer, seller, at what price, everything. They will ask you tax implications under income tax law. Clear? That's it. Then we have something called 194J. 5 types of payments are covered. What are the 5 types of payments? Professional service fee, technical service fee, non-compete fee, royalty, director fee. Totally 5 payments are covered. Now, for whom this section is applicable? Any person other than individual and HUF. Suppose I am a partnership firm, I am a company. all 5 types of payments if I am making, all 5 types of payments if at all I am making, yes or no, this 194J is applicable. Sir, I am not firm partner, all that. I am an individual and HUF. And my turnover in the last year 1 crore crossed. My receipts in the last year 50 lakhs crossed. Then for me, is this section applicable? Yes, applicable, but only 2 payments. Only fees for professional service, fees for technical service. For individual and HUF, no, 194J section is applicable for professional service fee, technical service fee. Suppose individual is paying royalty, 194J section will not apply. Individual is paying non-compete fee, 194J section will not apply. Yes or no? Next, who is the payee? Resident payee. Who is the payee? Resident payee. TDS at what rate? Sir, for professional service, 10% is the TDS. For royalty, 10% is the TDS. Non-compete fee, 10% is the TDS. Direct remuneration, 10. Everywhere, 10% only. Yes or no? However, for these 3 types of payments, technical services, or if the recipient is engaged in call center operations, royalty for cinemas, technical service, royalty for cinema, or if the recipient is engaged in call center, then TDS rate is what? 2%, 2%, 2%. Yes or no? When they should deduct TDS? If professional fee is exceeding 30, then only TDS. Fees for technical cross at 30,000, then only TDS. Royalty for cinemas I'm paying 30,000 crossed in a year, then only TDS. Any other royalty 30,000, non-compete fee 30. Threshold limit is not there for director remuneration. Yes or no? Threshold limit is not there for director remuneration. Simple. What payments are covered? Fees for professional service, fees for technical service, royalty for cinemas, royalty for others, non-compete fee, director remuneration. For all of them, each amount, each expenditure, 30,000 separate limit is there. Remember, 30,000 limit is not combined all put together. It's a separate limit for royalty, separate limit for technical, separate limit for fees for professional. Yes or no? Suppose no, to single person, I'm paying professional fee, I'm paying technical fee, 20,000, 20,000 I paid. Both put together 40. Section I will not apply because each professional service fee less than 30, technical service fee less than 30 in a year. Yes or no? Therefore, the section will not apply. All the amounts, 30,000 separate threshold limit. However, director remuneration, no threshold because section is silent on that. Able to understand. By the way, director remuneration means what? Director sitting fee. Director remuneration means what? Director sitting fee. Yes or no? Now again, if at all you are making for personal purposes, professional fee, technical fee, all that, no TDS at all. Are you clear? So what is professional service? What is technical service? All that. What is royalty? Everything is defined. Royalty also includes computer software purchase. You are paying amount for software purchase, that comes under royalty. Suppose no, I am paying amount in a subsequent transfer. He is reselling me the software. Yes or no? And earlier, no, when he originally bought, he deducted TDS. Transferee, he gave me a declaration that I already deducted last time. Now I'm just reselling the software without any modification. Then I need not deduct TDS on the purchase of software from the previous owner who is reselling it. Are you getting it? That's it. 194J is over. Already 194K we already completed. Then 194 LA, I should have discussed it in IA itself. 194 IA is what? Purchase of immovable property. 194 LA is also purchase of immovable property. Both are purchase only. But in 194 IA, we are purchasing under compulsory acquisition mode from the seller. Seller is not voluntarily selling, compulsory acquisition. And annual, the amount we are paying, no compensation is crossed to 2,50,000. Then TDS will apply at 10%. TDS will apply at 10%. But in 194 LA, agricultural land, whether rural and urban, does not cover. But 194 IA, I missed this point. Rural agricultural land is not covered in 194 IA. Suppose if I am purchasing urban agricultural land, 194 IA, 1% logic will apply, 50 lakhs crossed. 194 LA, rural or urban, doesn't matter because compulsory acquisition of urban agricultural land is exempt under 10 subsection 37. That's it. Clear? Next, 194M. 194M is applicable to individuals and HUF who are not covered under 194C, not covered under 194H, not covered under 194J, or they are making payment for personal or business, doesn't matter, but they are not covered under these 3 sections. I am paying for work, I am paying for professional fee or technical fee, I am paying for commission or brokerage, some amount I am paying for my business purpose or my personal, doesn't matter. I am not covered under those 3 sections. Am I liable to deduct TDS on payment to do work, payment for professional, payment for brokerage? Should I deduct? Yes. If the annual amount is exceeding, 50 lakh, if the annual amount is exceeding 50 lakh, you should deduct TDS. Okay. At what rate? Up to 30th September, whatever the amount is belonging to, 5%. From 1st October, if at all you are paying the amount, 2%. Remember, threshold limit is not separate for October and separate for, before October and after. Year full, how much amount paid? 50. Then up to September, 30 lakhs I paid, sir. After September, 40 lakhs I paid, sir. Then before October month, before 1st October, then up to 30th September, on this 5%, on this 2%, you will apply TDS. Are you clear? Remember, 5%, 2% logic is there. Once again, I'm repeating: 194G, 194H, 194IB, yes or no, 194M, and 194DA, insurance payment. In all these 5 sections, up to 30th September, 5% TDS. From 1st October, 2% TDS. Yes or no? That's it. TAN number concept do not apply in this section also. Clear? Then 194N, TDS on cash withdrawal. You are withdrawing cash. Who is paying you? Bank is paying you. Post office is paying you. Cooperative bank is paying you. So this section is applicable for banks, societies, bank, cooperative banks, and post offices. When they need to deduct TDS, when you are withdrawing cash. When they, yes, sir. Suppose society is withdrawing cash. What is the limit when the TDS shall be deducted? Others are withdrawing cash when they need to deduct. Others, in the last 3 years, 1 year at least you filed ITR. In the last 3 years, current year you ignore. You're withdrawing now. 24, 25 you're withdrawing. We will see 23, 24, 22, 23, 21, 22. In these 3 years, have you filed return of income? I'll ask. Yeah, you filed it. Then no problem. Above up to 1 crore, no TDS. 1 crore cross, 2% TDS. Sir, last 3 years, all the 3 years I'm not a ITR. I'm not filing ITR. I'm a non-filer. Technically. Then the moment 20 lakhs cross, TDS will apply. Up to 20 lakhs, banks cannot question. The moment 20 lakhs cross, up to 1 crore, 2% TDS. Beyond 1 crore, if you are withdrawing, 5% TDS. For cooperative society, instead of 1 crore, it is 3 crore limit. Instead of 1 crore, it is 3 crore limit. Society, suppose cooperative society is withdrawing cash. They filed ITR, sir. Then beyond 3 crore, only 2% TDS. Sir, they are not filing ITR. First to 20, no TDS. From after 20 to 3 crore, 2%. Beyond 3 crore, 5%. That's it. Are you clear? By the way, ITR filed means what? ITR filed within due date only will be considered. If at all in the last 3 years, I filed ITR after due date, then I will be treated as not filed only. Able to understand. Next, by the way, if the amount is withdrawn by government, if the amount is withdrawn by banks, if the amount is withdrawn by business correspondents of the bank, if the amount is withdrawn by ATM operators, if the amount is withdrawn by notified persons, for them no TDS will be applicable under 194N. Yes or no? Easy or not? That's 194P, pension. 194P, pension. 192, 192A, 194P. All the 3 are dealing with salary related heads only. 194P, for whom it is applicable? Suppose I am an individual resident, aged 75 or more, and I have a bank account with one bank called State Bank of India. Only with them I have a bank account. I don't have bank at anywhere else. I get pension money from my ex-employer. In the same bank account I receive. With the same State Bank of India, I am having fixed deposit, time deposit, something I have. I am getting interest. I don't have any other income. Then this section calls me specified senior citizen. The State Bank of India, where I am having bank account, right, from where I am receiving my pension amount, from where I am receiving my interest amount, where I don't have any other interest or any other income from any other bank, yes or no, then the State Bank of India is called as a specified bank. Now I will go to State Bank of India. I will give a declaration under 194P to State Bank of India that I don't have any income, I don't have any bank account, I don't have any income, I get only pension income, I get interest income, both are received through your bank account only. Then the State Bank of India will take the declaration. They will compute your gross total income, they will compute your chapter 6 deduction, they will compute your total income, they will compute your tax liability, and that tax liability State Bank of India will deduct from you. They will deduct from you at the time of payment of pension and interest to you. They will deduct from you and pay to the income tax department. Now what is the benefit here for me? I am exempted from IT return. No matter how much my income is, doesn't matter. I am exempted from filing IT return because State Bank of India is deducting my entire income tax liability, including surcharge, including cess, everything they are deducting. Yes or no? Just like in 192, how you compute employee tax liability, here bank will compute senior citizens tax liability. Yes or no? So they will deduct TDS and then pay to the government. Are you clear? So that's it. So recipient is who? Specified senior citizen. Payer is who? Specified bank. When a bank is called as specified bank, when a bank, they are not earning any other income except pension and interest, which is credited with specified bank, yes or no? That's it, easy. 194p not a big deal, yes or no? Then 194q, where real complexity. Okay, fine. Before 194q, no, I will discuss 194r. What is 194r? You know, I am a businessman. My dealer is giving me a gift because I achieved some target. Cash or kind of something is giving me. That is called as a perquisite for me under PGBP, which is taxable under charging section 28 PGBP. I am receiving a perquisite. I am receiving a benefit. Who is giving me? My dealer. Now the dealer has to deduct TDS because dealer is the person who is giving. I am giving to my wholesaler or retailer on meeting some targets. I am giving them a gift, a refrigerator, car, something I'm giving gift. I should deduct TDS if the annual value of the gift is more than 20,000. If the perquisite value, benefit value is more than 20,000. At what rate? 10%. By the way, which dealer has to deduct TDS? Only if it is any person or individual in HUF where turnover is more than 1 crore or receipts are more than 50 lakh. Then only for me this 194R section is applicable. And then I am giving a perquisite to my wholesaler, retailer, business people. I am giving some gift to my wholesaler, retailer or some business people. Yes or no? Then TDS will apply. Are you clear? Yes or no? It's easy. You know, give to any benefit or perquisite convertible into money or not, doesn't matter. Is it a cash or is it a kind of, doesn't matter. Clear? Next, 194Q, which is linked with 206C 1H. Yes or no? 1 minute. 2 minutes, we'll take a gap and then continue this. Yes, let's continue the discussion. Okay, 194Q. Suppose you are buying goods from a seller. Generally, goods purchase and sale, no. Goods transactions, no, they are subject to TCS only generally. But there is one section called 194Q, which is applicable for the buyer but not the seller. Suppose if I am buying goods, I am a buyer. This section is applicable to me when, you know, when my preceding year turnover is crossing 10 crore. Then only this section is applicable to me. When my preceding year turnover is exceeding 10 crore, then only for the buyer this section is applicable. Okay, to whom he is paying? Seller. For what he is paying? For purchase of goods. Which goods? Any goods, doesn't matter. I am a buyer paying money to the seller for purchase of goods. Are you getting it? Suppose if the goods are covered under 206C, if the goods are covered under 206C, timber, 206C1, timber, 206C 1F, car. Yes or no? These two sections, foreign currency I am purchasing, 206C 1G. For these goods, no, this section do not apply. However, remaining goods I am buying, then this section is applicable. Sometimes, no. For seller, there is another section called 206C 1H. That section says, if at all you are buying, you are selling any goods. For seller, this section is talking about whom? Seller. This section says, if you are selling any goods and you are selling any goods other than timber, forest, tendu leaves, scrap, yes or no? Notified goods under 206C1, motor vehicle, notified goods under 1F, foreign currency, you are saying, other than that, remaining goods you are selling, then 206C1H is applicable. So, which goods are covered under 194Q? Which goods are covered under 206C1H? Same goods. 206C1H, what goods are covered? 194Q, what goods are covered? Both are same. In both the section, all goods are covered except 206C1 goods, 206C1F goods, 206C1G goods. Except these three, remaining all other goods are covered under these two sections. Are you getting it? Now, 206C1H says, seller whose last year turnover is more than 10 crore. If at all you are selling to a single buyer for more than 50 lakh in a year, seller has to collect, what is it? Seller has to collect 0.1% of consideration, which is including GST. Value of consideration is exceeding 50 lakh. For determining value of consideration, GST component also you will consider in TCS provision 206C 1H. Are you getting it? So if it is more than 50 lakhs worth of goods to the buyer you are selling in a year, including GST, you must deduct TDS at 0.1%. Sorry, you must collect TCS at 0.1% from the buyer. Okay, this is 206C 1H says. What 194Q says, you know, if a buyer is buying goods exceeding 50 lakh in a year. If at all is buying goods exceeding 50 lakh in a year, buyer has to deduct 0.1% of the amount paid to seller for the amount which is more than 50 lakh. Up to 50 lakhs don't deduct. This is a slab limit, not a threshold limit. In TCS and here 194Q, 206C1H, in both these sections it's a slab limit only. Only for these two sections it's a slab limit. Yes or no? It's not a threshold limit. Buyer, for example, okay, you know, there is a buyer and buying goods from seller. At what price? You know, 1 crore. 1 crore worth of goods I am buying. By the way, this is not covered under, these goods are not covered under 206C subsection 1, 206C subsection 1F, 206C subsection 1G. Because in all these three sections, goods only covered. Foreign currency is also called as goods only, technically. So in these sections it is not covered. Remaining goods you are buying. Remaining goods only seller is selling. Then for seller, 206C section 1H is applicable. For buyer, 194Q is applicable. 194Q says 0.1% deduct. Yes or no? Deduct on 1 crore, right? But only on 50 lakhs you will deduct. Up to 50 lakhs you don't deduct. 0.1% on 50 lakh means what? 5,000, which means after deduction 99 lakh, 99,000, 95,000, correct? Sorry, 99 lakh 95,000. Simple. 99 lakh 95,000 you should pay to seller. This is what 194Q section says. But what 206C section says, you know, 206C, 1 crore, right? Yes or no? Plus 0.1% on 50 lakh, which is 5,000, is equal to 1 crore 5,000 rupees collect from buyer. 206C 1H section says to the seller, you collect 1 crore 5,000 from buyer. But 194Q section says to the buyer, you pay only 99 lakh 95,000. Both the sections are saying different amount. Buyer will say, I will pay 99 lakh 95. Seller will say, no, you should pay me 1 crore 5,000. For me, TCS section is applicable. If both the sections are applicable on the same transaction, then TDS will apply. 194 section will win. Yes or no? Now, by the way, 194Q is applicable to buyer whose preceding financial year turnover is more than 10 crore. Seller whose preceding financial year turnover is exceeding 10 crore. Suppose no, buyer turnover last year is less than 10 crore. Then 194Q do not apply to buyer. Automatically 206C 1H is applicable. Are you clear? Suppose buyer turnover is less than 10 crore. Seller turnover is also less than 10 crore. Both the sections will not apply to buyer and seller. The transaction is exempted under TDS. Yes or no? All of you, suppose let us assume you are buying 1 crore, right? Let us assume you are buying a car worth of 1 crore. Suppose you are buying a car worth of 1 crore. Car is not covered under 194Q, 206C 1H because car is covered under 1F. Automatically seller only has to collect TCS. If any good is covered under 206C 1, 206C 1F, yes or no? If at all goods are subject to TCS under 206C 1, 206C 1F, 206C 1G, then 206C only will apply. Only if the goods are covered under 1H category, then 194Q also we have to check. If both are applicable, 194Q will prevail over. That's it. Section is over. 194Q, 206C, 1C, 1H. Easy or not? All of you. Then directly. So that's it. If both the sections apply, tax shall be deducted under 194Q. Now let's begin TCS. Okay. Just a minute. Yeah. Now let's continue TCS. Then finally we will come back to administrative provisions. Okay. 206C TCS. What is the section says? You know, there are totally 5 sections in TCS. Subsection 1, 1C, 1F, 1G, 1H. 1H just now we completed, correct? Yes or no? Now in 194Q and 194H, one more point is there. Suppose no, 194Q, buyer only has to deduct. If seller is not giving PAN number, then maximum TDS rate is 5%. Yes or no? Suppose 206C 1H is applicable. Seller has to collect TCS from buyer. Buyer is not giving PAN number. 1% will apply. Then 1% in 206C 1H, no? Here, higher rate of TCS. If buyer is not giving PAN number to seller, seller has to deduct at TDS at higher rate 5%. But max 1% in case of 206C 1H. Yes or no? 194Q. If if at all buyer has to deduct TDS, buyer has to deduct TDS when they are paying to seller. Seller is not giving PAN number. Generally, maximum TDS rate is what? Maximum TDS rate is what there? Maximum TDS rate is what? 20%. But under 194Q, maximum TDS rate is 5%. Yes or no? That's it. Then remaining provisions, I'll come back to it later. Okay. Then suppose no, specified goods you are selling. What are they? Minerals, not mineral oil. Okay. Scrap, other forest produce, timber, alcohol, tendu leaves. Then these are the rates at which TDS will be applicable. This you see later. Okay. Sir, I am giving him parking lot. I am giving him toll plaza. I am giving him some quarry or license. For that I am getting some compensation. Yes or no? I should also collect 2% TCS. I am selling motor vehicle to him where the value is exceeding 10 lakh. You know where the value, here each car value should see only X showroom price, bike value, X showroom price, car, bike, bus, lorry, whatever, vehicle, X showroom price is more than 10 lakhs. X showroom means what? Including GST. Under TCS provisions, every sale value means including GST. Are you clear? Then recently one more point added for notified goods from 1st January. This is recently added for the first time for May 25 exams. Latest amendment. Notified goods, what are they? They didn't mention. Notified goods are also covered under 1F, which means a seller has to collect if vehicle value is exceeding 10 lakh, 1%. For notified goods straight away, 1%. Clear? Next, 1H is already over. Now let us discuss 1G. 1G is dealing with what? Sub 1G is dealing with two types. Overseas tour package, remittances. What is it? Remittances. Remittances under LRS scheme. Are you getting it? Overseas tour package, separate 7 lakhs limit. Remaining remittances all put together, 7 lakhs the basic exemption limit. Getting it? Now for overseas tour package, first 7 lakhs rupees worth of payment straight away 5% TDS. If the amount is exceeding 7 lakh, 20% TCS. In our class, no regular, no, we already solved our some past exam question or MTP questions we solved. Yes or no? That's it. Sir, I am remitting for some other purpose, not overseas tour package. I am not purchasing any foreign tour package. Getting it? Foreign tour package, if you are purchasing straight away, 5% up to 7 lakhs. 7 lakhs it crossed on the extra amount, 20%. Sir, I am not for foreign tour package. I am paying for some other purpose. What? Education and medical. Here add word medical and medical. You are paying for education and medical. Then first 7 lakhs, 0. 7 lakhs crossed, 5% TDS. If at all the amount is crossed, 7 lakh, 5%. Sir, it amount crossed 7, sir. Education purpose on I am paying, sir. But out of loan, education loan we are paying. Then 0.5% is the TCS. Then what is the TCS? 0.5% is the TCS to be collected by foreign currency dealer who is remitting foreign currency on behalf of remitter. From remitter they should collect the TCS. Yes or no? Sir, I am remitting for some other purpose. Any purpose you remit, first 7 lakhs in a year is exempted. In the year 24-25 you are remitting. First I will ask you for what purpose? Overseas tour package, straight away 5%, 20% as usual. Remaining amount, first 7 lakhs I will not ask any question, exempt. Beyond 7 lakhs you are remitting for what purpose? Education and medical, sir, then 5%. Education for loan, out of loan, 0.5. Some other purpose, 20%. Some other purpose you are remitting. Suppose you are gifting to your cousin abroad. Yes or no? You are remitting some cash amount abroad, foreign currency remittance. Yes or no? 7 lakhs crossed in a full year, straight away 20%. Now many students misinterpret here. 7 lakhs for education separately, for other purpose separately. No, whatever purpose you are remitting up to 7 lakhs is exempted in year. FIFO basis calculate the limit. Okay na? April to March is there. I remitted 7 lakhs through foreign currency dealer, not overseas tour package. Overseas tour package is a separate provision altogether. I am remitting some money through foreign currency dealer. Up to 7 lakhs, he will not ask me any question. 0. 7 lakhs crossed. 2 lakhs I am remitting now today. 7 lakhs already crossed. 2 lakhs I am remitting. For what purpose? Medical purpose. 5%. Another 2 lakhs I remitted. For what purpose? Education purpose. 5%. Some 10 lakhs I am remitting. For what purpose? Education purpose out of loan. 0.5%. I am remitting some another 2 lakhs or 4 lakhs. What purpose? Some other purpose, not education or medical. 20% TCS. First 7 lakh, no questions asked. That's it. 1G section over. Easy or not? Then who is a seller? From subsection 1, 1F point of view, same. I told you, remember, for 8 sections, the seller definition, the person who has to collect TCS, the person who has to deduct TDS is same. 1H, turnover must exceed 10 crore. Now under one, no, timber, tendu leaves, scrap, all that is there, right? Seller of timber, tendu leaves, all that they should collect TCS, no, scrap at 1, 2.5%, 5%, something like that, yes or no? But if the buyer is purchasing for manufacturing purpose, construction, for his personal consumption, not for reselling it, no TCS. 206(1)(f), car we are selling, motor vehicle we are selling, to whom? Road transport company. Public sector company engaged in public sector company engaged in transportation of passengers, nothing but road transport corporations you are selling, yes or no? No TCS. 1H for importers, for exporters it will not apply, because exporters exporting goods means he is selling goods to the importer in India. How exporter can comply with Indian TCS provisions and also he can't, so he will not have to deduct, yes or no? TCS provisions are not at all applicable if the buyer is a public sector, government to high commission, embassy. That's it, over. Now we still have 2 or 3 more provisions, getting it? Now there are some administrative provisions. What are administrative provisions? Important provision I will discuss. TDS, payer has to deduct, no, while amount is paid to payee. Suppose if the payee does not give PAN number, then TDS will be deducted at 2 times the section rate or 20%, whichever is higher. And for 194Q, for goods purchase related, 5% max. Yes or no? Same way in 206CC also, same logic, which is applicable for seller of the TCS. Suppose I am selling goods, buyer is not giving me PAN, then at what rate I should deduct TCS? 2 times of the section rate or 5% maximum TCS. But if it is 206C1H, 1% is the maximum TCS. By the way, overall, if it is 2 times, no. 2 times means what? For example, 1G, foreign remittance is there, 20% is there. Maximum TCS rate cannot exceed 20. In TCS section only maximum TCS rate is given. In TDS, no, non-furnishing of PAN, maximum rate they have not given. Yes or no? Minimum rate is 20, we know. Maximum rate there is no, 206 AA. That's it. Again, higher rate of TDS, higher rate of TCS is applicable if at all non-filer is there. Suppose I am selling goods to a buyer. He did not file his IT return in the last year. And in the last year, he has a TDS amount of more than 50,000 or TCS amount more than 50 or both. Yes or no? Last year, he has a TDS or TCS amount more than 50 and not filed IT return. Getting it? That time, 2 times of the tax or 5%. Maximum cannot exceed 20. 206CCA. Same way, in TDS also, deductor, payer has to deduct. When paying amount to specified person who has not filed IT return in the last year and has a TDS or TCS minimum 50,000 or more, that time he should deduct 2 times the section rate or 5%, whichever is higher. This TDS section 206AB, high rate of TDS for non-filers, will not apply for salaried payments, pension payments, yes or no? 192, 192A, 192B, 194IA, IB, 194M, here 6 you remove, and 194N. Are you clear? Easy or not? That's it. Suppose no, if both these sections apply, higher will be applicable. In TCS also 206CC, 206CCA, if both are applicable, whichever is higher, that rate you will collect. That's it. Clear all of you? Then what is the responsibility of the person deducting the tax? Simple. Whatever the tax you deducted, by next month 7th day you should pay it. For March month, by next month 30 you should pay. Not only paying challan, you should also file ETDS statement. You should also file ETDS statements, correct? You should file quarterly statements. Quarterly statements means what? Q1, 30th June quarter ending, 31st July you should file ETDS statement. Q2, 30th September quarter ending, 31st October you should file return. Q3, 31st January you should file the return. Q4, 2 months time limit, 31st May you should file the TDS return. So the person who is deducting or collecting, they have a responsibility to file ETDS statement. Quarterly they should file, monthly they should pay. Monthly then they should pay April month TDS TCS, 7th of next month. April, May, June up to February, 7th of next month you should pay. March month alone, by 30th April you should pay to the government through challan. Yes or no? That's it. Suppose I failed to deduct or I failed to remit, then I am liable to pay interest. If I am failing to deduct 1% per month or part of a month, per month or part of a month means calendar month. We already did one illustration also in the class. Yes or no? Then from which date? From deductible date. So date of payment they will give, no, that date. June month it is, that date. You ultimately deducted in January month. Total June, July, August, September, October, November, December and January. So June to December, 7 months, and January. Total 8 months will apply. Yes or no? Don't calculate month means 7th of this month means next month 6th, 1 month. No, that's not how it is to be calculated. June month you deducted. 10 days only there in the June month. Full month you will consider. January 5th you deducted ultimately. January also you will consider. Yes or no? 1% till the date of deduction. So date on which you are liable, check out. Date of deduction you check out. What are all months involved, check out. That's it. That many months. Finally, you deducted in January. You should pay by 7th February, right? But you didn't pay. You paid on 7th July. You deducted in January and you paid on July month. Yes or no? So now January month deduction is, January means due date for payment is what? 7th February. Generally students will compute interest from 7th February onwards. No. In case of late remittance, 1.5% is the rate of interest. Interest is calculated from deduction date itself. Deduction date is in January. January month you should calculate 1.5% interest. You ultimately paid in when? July month. Up to July month, 7 months you should calculate 1.5% per month interest from deduction date till remittance. That way I gave intentionally due date onwards and I striked off. Are you clear? Then SSC in default and all is that, that's okay, not that required. Okay, I already discussed enough in the class also. I clearly discussed on this. Clear or not? That's it. So with this, TDS and TCS provisions are fully completed. Confident? Yes. Okay, advanced tax. I will discuss briefly the advanced tax provision. The crux I will discuss. Okay, advanced tax liability. The provisions are covered under 207 to 219. The charging section is 208, 207 and 208. Both are talking about applicability. Advanced tax provision does not apply to a resident senior citizen who do not have PGBP income. Advanced tax liability will arise in the current year if my gross tax liability minus TDS and TCS, estimated gross tax identify, estimated TDS TCS identify, gross tax minus estimated TCS TDS you reduce, balance tax payable you will get estimate. If that is more than 10,000, if it is more than 10,000 or more than 10,000, you have to pay advance tax. Now this tax payable amount you should pay in the form of advance tax. When and all you should pay 4 installments. On or before 15th June, 15% of the tax payable amount you should have discharged. On or before 15th December, minimum 45% of the tax payable you should discharge. On or before 15th December, minimum 75% of the tax payable you should discharge. On or before 15th March, 100% you should discharge. Are you getting it? So each installment, how much you will pay? Simple. Here you will pay 15, 30, 30 and balance will be 25. Totally 100 amount, 100% of the tax payable you will be depositing. So cumulatively 45, cumulatively 75, cumulatively 100. That's it. This is how advanced tax mechanism has to work. Are you clear? Now, sir, for example, no, I didn't pay advance tax. By the way, 4 installments logic is applicable for every SSC. However, suppose I am an SSC who is declaring income under presumptive basis under AD and ADA, but not AE. But not AE. For these SSCs, only single installment applicable. Only single installment is applicable. Amount paid up to 31st. Okay, single installment. By the way, up to 15th March, advance tax 4th installment. Correct? Single installments. By 15th March, you pay 100% of the tax payable. Enough. March 15th later also you paid some tax, but on or before 31st March, that is also treated as advance tax. Suppose I did not pay like this. 4 installments are there. I paid, but that is not enough. Then I am liable for interest on short payment of advance tax. I am liable for interest on short payment of installment. Interest, I am liable for short payment of installment. How should I compute the shortfall? Very simple. You know, in exam you should compute. You know, in exam they'll give you a problem. They will give you IT return income, how much they will give you. For example, 10 lakhs they gave. Income, how much they gave? 10 lakhs. On that, no, compute tax liability. For example, 1 lakh only the tax is coming. How much is the tax is coming? 1 lakh. Getting it? Now, how to compute the problem under 234C? Interest under 234C is applicable. Now, 15th June, first installment, 15th September, 15th December, 15th March. How much you will pay? Minimum 15,000 you must have paid. By 15th June, 45,000 must be there in the advance tax account. By 15th December, 75,000 must be there. By 15th March, 1 lakh must be there. But you know what? SSE paid here 10,000 only. SSE here, second installment he paid 20,000. Totally he paid how much? 30,000. Third installment he paid 20. Totally he paid 50,000. Fourth installment he paid another 20, where he is making it totally 70. Cumulatively how much paid you should always identify. Don't put amount paid in each installment. Put cumulative amount paid up to date. Then identify shortfall. Identify shortfall. How much it is? 5,000. How much it is? 15,000. Shortfall means what? This minus this. This minus this. This minus this is equal to how much it is? 25,000 shortfall. Here it is 30,000 rupees shortfall. Then interest will be applicable. At what rate? Into 3 months into 1%, into 3 months into 1%, into 3 months into 1%. What is the logic? I already told in our regular class clearly. We computed alternative mechanism also. Yes or no? Is equal to how much? 5,000 into 1%, 50 into 3 months, 150. Here it is 450. Here it is 750. Here it is 300. What is the total interest under advance tax? 600 plus 1050, 1700, 1650. That's it. That is the interest computation. That's how you must do advance tax interest. Watch once again. You will understand the process. This is how you must do. In exam they will give you IT return, how much income they give returned income, or sometimes they'll give you total income of the SSE. So total income they'll give you. Find out gross tax liability minus TDS and all you reduce. Balance amount is more than 10,000. Then advance tax obligation will apply. This amount is tax payable only. In this example, no, TDS is not there. Let us assume. So allocate each installment. How much they paid, they will give you. Sometimes they will pay 0. Then on the entire shortfall, you should calculate interest like this: 3 months, 3 months, 3 months, and 1 month. Yes or no? Now, for first installment and second installment shortfall, no. Before you calculate interest, one checkpoint is there. Here you paid how much? 10,000. You are supposed to pay how much? 15. Okay, percentage if you see, 10% only you paid. Second installment you paid 30% only is there as part of tax payable. But you know, the section says what, you know, if the first installment is minimum 12, second installment no minimum 36. By second installment due date minimum liability, how much you paid? Minimum 36 you paid. First installment minimum 12 you paid. If at all minimum 12 and minimum 36 says there, even though shortfall is there, no interest at all. No interest. This is only a checkpoint. Many students know, they think 12% applicable here, 36% applicable, and they calculate shortfall like that. Never. Shortfall is calculated 15, 45. Based on that only shortfall is calculated. But interest amount should I compute? First installment shortfall, second installment shortfall. Should I compute interest amount? This is the question. Interest amount is exempted for first installment shortfall, second installment shortfall. If the advance tax paid in first installment is minimum 12% of tax payable, total advance tax paid by second installment due date is minimum 36% of tax payable, then for first and second installment no need to calculate interest at all. Even though there is a shortfall, SSE paid 12 or 13 which is less than 15, SSE paid 36 or 40% which is less than 45, shortfall is there, but exemption is given. And I told you why there is a logic. Why? What is the logic behind this? I already told you. This is how you should compute 234C interest. Clear? Now remember, in 234C you are calculating shortfall interest amount only up to March month, but you are filing IT return in July or August or September or October, somewhere you are filing. You are paying pending amount of tax in July, August, somewhere you are paying. What about the remaining period? Delay, no, you are paying late only. No, advance tax you didn't pay. For late payment only they are collecting interest. What about interest from April month of assessment year? 234B section will apply. As per 234B, as on 1st April of the assessment year, identify shortfall. How to identify shortfall? Gross tax liability you compute based on assessed income. Based on assessed income. Assessed income means what? 143 subsection 1, 143 subsection 3. In the IT return order, income tax order you will get. In that how much is the total income, identify. Sometimes you know, when you're doing a problem, they will not give you assessed income. Income tax order information they will not give. That time IT return income only you should consider. That time IT return income, how much you declared only you should consider. So based on that, gross tax minus TDS minus up to 31st March of the previous year you paid advance tax, right? That also you reduce, then you get a shortfall. Are you getting it? How to? So gross tax liability, for example, 1,20,000 minus TDS 20,000, balance tax payable 1 lakh. And you know what? Up to 31st March, 70,000 only I paid. So as on 1st April, 30,000 shortfall is as it is there. Now 234B interest is applicable at what rate? On the shortfall, 1% per month. For how many months? April month onwards till you pay this pending amount. You clear pending amount 30,000. Then until the date, or assessment order pass date is there. In exam they'll give you assessment order date, 143.1 intimation date, 143.3 assessment order date. Up to that month you will calculate interest. If nothing is given, they only mention about 30,000 he settled with the income tax, then up to settlement date. Are you clear? Generally we will compute this up to due date, 4 months in case of July, in case of October 7 months. Due date if it is October, no, then 7 months we compute, because no, generally this amount will be paid by SSC in due date. When they are filing IT return, that time they'll pay. Suppose if the SSC paid this amount much more earlier, then up to payment date, how many months involved? For that many months only 1% per month we will calculate. Again, this interest calculation is exempt. When you know, look at this. If up to 31st March, whatever amount paid is there, right? If it is more than 90% of tax payable, more than 90% of the tax payable you paid in the form of advance tax, even though shortfall, suppose no, here 90,000 you paid, shortfall is 10,000 there as on 1st April, no need to pay 234B interest, because minimum 90% of your advance tax liability you paid. 234B is also over. Are you clear? Advance tax provision is over. But in advance tax, one concept is there which can be tested in exam regarding casual incomes. Theory question might be tested. Getting it? Theory question might be tested. What is this concept? Suppose no, you started recently the business, or you got a lottery income in December month, or you got a capital gains in December month, or you are getting dividend income in December month. Because of this shortfall is there in June and September. You income itself is in December. How come shortfall will be there in June and September? Don't consider this income related tax portion when you are calculating shortfall in June and September. Now, only one condition. You got capital gains in December, March installment, you pay tax on that fully. No 234C interest. That's it. 234C, 234B, applicability, exemption of advance tax, presumptive taxation, everything I covered in 10 minutes. 11 minutes hardly. I clearly covered. Now what is your duty? Listen to this once again, okay? Then read the provisions given in this book. You will get supreme clarity on advance tax. That's it. Clear? Let's begin total income chapter, where we are only having one provision to discuss. You know, in ICA book, no, if you open this chapter, no, total income chapter, no, there is so much of unnecessary discussion and all is there. Once again they'll talk about all the provisions, default tax, all that, not required. What is the most relevant provision in the total income chapter, that I am covering here. Rest of the points which are there in total income chapter in ICA book, no, they are all covered in other chapters for us. That content unnecessarily confusing you, no, don't go for it. AMT provision, total income and AMT, alternate minimum tax. What is alternate minimum tax? Suppose no, by the way, the sections are 115 JEE and JC. Both are dealing with only same concept. Okay, one section is talking about applicability, another section is talking about procedure. That's it. One is talking about applicability, one is talking about the procedure. JC talks about the procedure. Okay, JEE is talking mainly about the applicability. Now, what these sections are saying? Suppose no, any person other than company, because for companies, AMT, MAT, there is another provision, 115 JB is there. For company, there is another section called 115 JB, which is not there for in our syllabus, CA Inter. It is there only in CA Final. What the section says? Any person who is claiming deduction under, look at this carefully, if this provision, introduction, if you do not understand, that's it, gone. Any person who is claiming deduction under chapter 6A heading C, not all chapter 6A, remember, Heading C chapter 6A. What are heading C chapter 6? Heading C chapter 6A. In our syllabus we have only 3 sections: AT, JJAA, QQB, RRB. Employee, additional employee cost deduction, those who are claiming deduction towards royalty income, those who are claiming chapter 6A, AT, JJAA, QQB, RRB, or other heading C deductions which we don't have in our syllabus. Yes or no? So SSCs who are claiming chapter 6A deductions other than ATP also we don't have in our syllabus, so don't worry. So in our syllabus we have only what? These 3 sections. So if the SSC is claiming deduction under these 3 sections of chapter 6A, or SSC claiming deduction under 10AA, or SSC is claiming deduction under 35AD, income based deductions, nothing but. If the SSC is claiming deductions for incomes, not all again, interest on savings deposit, that is not covered again here, by the way. Okay, SSC claiming deduction, these are all deductions given based on some business specialty. If the SSC is claiming deduction under 10AA, or if the SSC is claiming deduction for specified business capital expenditure under PGBB under 35AD, or if the SSC is claiming additional employee cost 30% deduction, QQB, RRB, royalty related deduction, then AMT provisions will apply. AMT provisions will apply. What is AMT provision? Purpose of AMT, I will tell you. Simple logic. Suppose I started a 5-star hotel. I made a profits and gains from business or profession 10 crore before 35 AD deduction. Before 35 AD, that capital expenditure before I claim, my revenue income minus revenue expenses is equal 10 crore profit I have. But hotel construction cost 200 crore, I claim a deduction now, building cost. Resultantly, my income reduced to negative 190. And what the section says, we have a section called 73A, you can carry forward for infinite number of years. So because of this, what is happening? SSCs are not at all paying tax. Same way, suppose I am incorporating a company in a special economic zone, I mean enterprise in a special economic zone, any entity, and I'm exporting, only export I have. Entirely I'm receiving in foreign currency within 6 months, 10AA. Remember, we have already seen. My full profit is exempted. I literally pay 0 tax. Because these sections, they are bringing your income to 0 or negative, and where you are not paying any tax at all. But department want to collect minimum some tax. But they gave deduction, they can't collect it, because you have a negative income here. As per your section logic, it is a negative income. But what department is doing, they bought a section called 115 JEE and JC. What they are saying is, let me compute AMT for you. Let me compute alternate minimum tax for you. What the section says, so your income is what? 10 crore. Add back the deduction. How much deduction you claim? 200. Sorry. You are having loss of 190. You are having loss of 190 crore. Do one thing. Add back 200 crore deduction. Yes or no? Now how much is your income? Crore. Correct? Before adding the deduction, how much is your income? 10 crore. 35 AD deduction, 10 AA deduction, QQB, RRB, JJAA deduction. If at all you claimed, you first see, always first calculate as per normal. Whatever rules applicable, calculate total income. Add back these 3 deductions. Now see how much is the income. Department is asking, pay 18.5% tax on. Pay 18.5% tax on this. How much? 1.85 crore. Pay through challan plus cess and all, add and pay. Pay minimum tax. This is the minimum tax you pay. Arey sir, you told me I am having 35 AD deduction. All these days we are thinking my income is negative. I don't have any tax liability. Now you are saying you will add back and then collecting tax again. Then what is the purpose of the section? Don't worry. The department is saying you are paying this 1.85 crore now in cash right to me. Tax payment is over, right? This amount I will give you as AMT credit. I will give you this amount as what? AMT credit. This amount I will give you as, remember the section is actually little more different is there. First I am telling you basic how the section works. I am first telling you how basic section works. AMT credit I will give you first. I will give you. What will I do with this, sir? Next year You will calculate normal provisions based income tax, right? Suppose next year, no, your revenue income minus revenue profit is equal to 20 crore is there. That time you don't have 35-80 deduction. How many times you will invest? First year only you will invest in business. Second year also you constructed another building. No sir, second year and all I don't have. Okay, that in the second year, no, business, no, I don't have 35-80 deduction. 10 year not there, nothing is there. On normal income, 30% tax is equal to how much? 6 crore. Are you getting it? On 6 crore, this amount you set off. This amount you set off. Indirectly, what are they saying? In the year in which you claim deduction, I will give you deduction. You show your loss, carry forward loss, everything is same. But when you are computing tax liability, no, at that time alone AMT provision will apply. Remember, AMT is not applicable for total income computation. AMT provision we should apply at the time of tax computation. Does AMT computation have any impact on set off, carry forward, gross total income computation? No. It is only a tax computation time you should do working note. That's it. AMT is just a working note at the time of tax computation. Minimum how much I should pay tax. For that reason only AMT you are doing. Are you getting it? So compute tax. AMT you pay. So every year as per AMT, whatever tax comes, that minimum you should pay. Beyond AMT you have a tax in normal regime only. Normally only you have 6 crore tax. Suppose in second year also I claimed 35-80 deduction. I claimed 10-year deduction, something is there. But as per AMT, 2 crore only coming in the second year. But as per normal provisions, 6 crore tax is there. That time AMT will not apply. Normal provision will apply. That time what is applicable? AMT will not apply. Normal will apply. Remember, once again. Sir, I claim a deduction under 10AA. I claim a deduction under 35AD. Or I claim a deduction under 80JJAA, QQB, RRP. Okay, you claim a deduction. You claim deduction, compute total income, all that. You compute total income, some amount is there. Compute tax on that, 5 crore is coming, for example. You compute your normal tax liabilities, how much is coming? 5 crore. Very good. Keep it aside. Don't pay this amount directly. Compute AMT now. How do I compute AMT? Your total income is the right. For that, add back 35AD, 10AA, 80 series deductions, all that you claimed, right? Add back. Now you get some income, right? This is called as adjusted total income. This is called as what? Adjusted total income. The word adjusted total income is used here, ATG, but the meaning is altogether different. Compute adjusted total income. By the way, this entire working I should do in rough notes only. This is not affecting my income computation, set off and carry forward provision, nothing. My income tax computation is always same. My total income computation and all is this only. This is only for working note purpose, yes or no? Now, total income you take, add back the deductions, you get some amount on this. Straight away apply 18.5% tax. Straight away apply 18.5. Sir, this amount comes 7 crores, sir. This amount comes 7. Oh, as per normal income tax, your tax liability is 5 only. But as per AMT, 7 is there. You must pay alternate minimum tax. This is a minimum tax you must always pay. 7 crore you pay. Anyhow, you are liable to pay 5 crore, no? 7 crore because of AMT you paid, no? Now tell me, SSC problem is here what? Paying 7 crore is a problem, huh? Or paying more than 5 crore is a problem, huh? More than 5 crore is a problem. Do one thing. You paid extra in the form of AMT, how much? 2 crore. This 2 crore I will give you as AMT credit. You can carry forward in the upcoming years. 15 years. You can carry forward for 15 years. What I will do after carry forward? Set off. Set off with regular income tax liability. Set off with regular income tax liability. Sir, okay, sir. This is year 1, sir. Year 1, no. AMT credit is there, which is 2 crore. I will carry forward, sir. In year 2, no. I have regular tax, which is 4 crore. And I have AMT, which is 3 crore in year 2. Luckily, I have how much? 3 crore in year 2. Or else, let us assume 3.5 crore. How much I have? 3.5. Now, forget about year 1. Year 2, will I pay AMT or normal tax? Department clever. Hey, if normal tax is 4 crore, no, more than minimum, no, pay 4 crore only. But sir, I have AMT credit, no? You told me I can set off, no? 4 crore minus 2 crore, balance 2 crore only should I pay? No. Minimum tax AMT, whatever is there, I want to buy cash only always. To the extent of minimum 3.5 crore, I always want tax only, cash only. Department will not, out of 4, no. 3.5 crore is anyhow AMT you are liable, no? Extra how much you are paying? 50 lakh you are paying extra tax in the second year in normal provision. This 2 crore can be set off with this 50 lakhs. The 2 crore limit can be set off only with 50 lakh only. Whatever minimum 3.5 you are paying, no, that and all you should pay in cash only. Now tell me, balance AMT credit how much now? 1.5 crore is the balance. Again you carry forward 14 years. Again you carry forward for 14 years because year 1. By the way, in year 2, did you pay AMT? In year 2, did you pay AMT? No, you didn't pay. You paid only normal model applicable. AMT not apply. But to the extent of AMT liability, department will collect only in cash. Just because they are collecting in cash to the extent of AMT, does it mean are you paying AMT liability? You're not. You're paying normal tax liability. Why? The logic is what? AMT credit cannot be set off with AMT liability. Simple logic. Input tax credit cannot be used to set off input tax to be paid under reverse charge. Input tax liability you pay under reverse charge, no? Suppose if I have to pay in GST reverse charge, input tax, reverse charge tax, can I use my input tax and pay reverse charge tax? I cannot, because reverse charge is also input tax. Input tax you should pay, you should set off with output tax. You cannot set off with the same. AMT input credit can be set off only with regular income tax. It cannot be set off with AMT liability. Are you getting it? Don't worry, I will summarize. Indirectly, what are they saying? Suppose alternate minimum tax compute. Every year you compute AMT. By the way, you will compute AMT only when in that year, if the SSE claimed 35AD, NAA, JJAA, QQB, RRP. SSE claimed that deduction. Then to the total income, add back them. The adjusted total income you will get. On that 18.5% you compute. Then the tax is called as AMT minus SSE. If AMT is not there, normal total income is there. As per that normal tax rate, 30% to special incomes, all the tax rate is there, right? You calculate regular tax. If AMT is more than regular tax, if it is positive, then you should pay AMT liability directly to the department, yes or no? And whatever tax amount paid under AMT in excess of regular tax, what is it? In excess of regular tax, that extra amount is called as AMT credit. Very good. AMT credit, what you can do? You can carry forward for 15 years. You can carry forward for 15 years. Against what you can set off? AMT credit you can set off against regular income tax in the next year, exceeding AMT liability in that year. In the second year, third year, like that, no. Calculate regular tax. Calculate AMT in that year also. Beyond AMT, how much extra regular tax you are getting? Something is there positive, then only you can set up with this. Sir, in second year also, my AMT is only higher than regular, sir. Which means in second year also AMT only applicable to me. Then what? No, then that time what you will do? No, AMT minus regular tax amount is there, right? That you will carry forward for another 15 years. Are you getting it? All of you? Simple. What is alternate minimum tax? Adjusted total income you compute. On that adjusted total income, apply 18.5% tax plus cess rate. Yes or no, 4% cess. All that you apply. Then whatever the tax you get is called as AMT. Are you clear? Here no, special incomes, 20% capital gains tax rate, 10% capital gains tax rate, 12.5% capital gains tax rate, 15% triple 1 year before amendment tax rate, that and all ignore. On adjusted total income, straight away tax rate is 18.5. Sir, adjusted total income consists of special income, sir, lottery income. Ignore. When you are calculating AMT, straight away entire income is taxable at 18.5%. Are you getting it? Now, okay, sir, AMT calculated. Now, what should I do? Compare this AMT with the normal tax, regular income tax payable. Is AMT more than regular income tax? Yes, sir. Then that excess amount is called as AMT credit. Getting it? By the way, AMT amount you should pay by challan. You should pay by challan. Now immediately you might get a doubt. Sir, regular tax, optional tax regime, default tax regime, optional tax regime only. You see, SSC, a person who is paying tax under default tax regime under 115 BAC, AMT itself will not apply. Logic is simple. 35 AD he can't claim. 80 JJA, QQB, RRB he can't claim. But remember, 80 JJA he can claim, no? 80 JJA he can claim under optional default, both the cases. But AMT provision will not apply if default tax regime is applicable. Simple logic. Suppose in the problem, no, SS is going for default tax regime. Blindly AMT question itself will not apply. Sir, SS is going optional tax regime. 3580 deduction he is claiming. Or 10A he is claiming. 80 JJA, QQB, RRB he is claiming. Optional tax regimes are not default tax regime. Then AMT logic will apply. Are you getting it? Yes or no? So now look at this. So excess amount is called as AMT credit. Please carry forward it for 15 years. This AMT credit, no, I can set off with regular tax amount which is in excess of AMT in that year. Are you getting it? Every year AMT will be there. For example, to the extent of AMT, always you should. Suppose in that year AMT itself is not there. Entire tax is regular tax. Then entire AMT credit I can set up with a regular tax. Here or not? Over. This is one of the tough provision, you know. One of the toughest provision which many don't understand. Getting it? Simple logic like this. Clear all of you? Now look at this. How should I calculate? So when AMT is applicable, any person who is claiming deduction under these 5 sections, 10AA, 35AD, 80 JJAA, 80 QQB, 80 RRB, for them AMT is applicable. Exemption from AMT, non-applicability. When AMT does not apply, the individual is declaring income under default tax regime. If the SSC is declaring income under default tax regime, or there is one more, adjusted total income is not exceeding 20 lakh. Array small SSC, sir. Why for him also? Adjusted total income is not exceeding 20 lakhs. For individual, HUF, AOP, BOI, AJP, if the adjusted total income does not exceed 20 lakh, then AMT will not apply. Are you getting it? Sir, what is adjusted total income? First you calculate a total income, no? Normally you calculate total income, no? How you calculated? After reducing 35 AD, after reducing 10 AA, after reducing 80 JJA, QQB, RRB, add back. Add 35 AD deduction. 35 AD deduction you claim, no? Add back. Deductions under 10 AA is there, no? Add back. Yes or no? And now tell I'm a deduction claimed under 80 JJA, RRB also add back. Now actually you are not claiming deduction, right? Add back means what? You didn't claim deduction. Remember, capital expenditure under 35 AD, if at all I am not claiming, I am eligible for depreciation on that, right? Depreciation, additional depreciation, I am eligible on that, right? If at all I am not claiming 35 AD, reduce notional depreciation. What is it actually called as? Notional depreciation for assets, for which 35 AD deduction is claimed as if no deduction is claimed. Because no, in AMT computation purpose, no, you are adding back what? 35 AD deduction you claimed, you are adding back, means you are not claiming, no. That time you will get depreciation, no. That adjustment you do in exam, no. 99% of the students miss this point only. This point they will miss. They will add back 35 AD. They will compute very super fast adjusted total income. They will pay 18.5. Entire answer is wrong. Depreciation they forgot. Depreciation they forgot to reduce. Are you getting the point? So if at all 35 AD deduction you claim, remember this logic will not apply for 10 AA deduction, 80 JJAA, QQB, RRB. If at all SSC claimed 35 AD deduction, add back. When you are calculating adjusted total, less you calculate roughly on the same capital expenditure, depreciation will come now. Buildings 10%, plant and machinery 15%, computer 40%, like that. Calculate depreciation. Additional depreciation also calculate if it is a manufacturing activity. Reduce that depreciation. Notional depreciation we call. Are we really claiming depreciation here? We are not claiming at all, sir. We are claiming 3580 deduction, sir, as per our tax. As per our regular income tax provision, we are claiming 3580 deduction. I am not claiming depreciation at all. Then why are you claiming? Sir, here also I am not claiming, sir. I am computing adjusted total income for the purpose of computing tax liability. This is a working note. This is a rough note, working note in a tax liability purpose. AMT concept and all come at what stage? Tax liability computation stage only. It will not come at income computation stage. Yes or no? If at all somebody asks me what is SSC total income, normal income only. What is tax liability? Then wait, sir. I have a working note. Okay, normal income I will compute tax. AMT also I should compute. For AMT, I should compute ATI, adjusted total income. For computing adjusted total income, I should add back deduction under 3580. Then I should reduce notional depreciation under section 32. Then I will get adjusted total income. If this adjusted total income is more than 20 lakh only, you will proceed further. If this adjusted total income is not exceeding 20 lakh, AMT provision itself will not apply. Yes or no? All of you, that's it. AMT is equal to what? Straight away 18.5% of ATI plus surcharge plus health and education cess. For surcharge, no, you will see adjusted total income limit with optional tax regime. Optional tax regime exceeding 1 crore but not exceeding 2 crore, exceeding 50 lakh, exceeding 2 crore, exceeding 5 crore. Yes or no? Optional tax regime, that limit 10%, 15%, 25%, 37% surcharge as the case may be. Then add cess. Are you clear? All of you? Yes or no? Then special incomes, if any, shall be ignored while computing. AMT, when you are computing, special incomes always ignore. Ignore means what? It's not reducing. Don't keep them in mind. Sir, for them separate tax rate. No, ignore. Entire adjusted total income is taxable at what rate? Straight away 18.5%. Correct? Now, what is the tax limit? Sir, I computed AMT, sir. Should I pay it? No. Wait, check. You have a checkpoint here. What checkpoint? If regular income tax payable by a person for a particular previous year as per normal provision is less than AMT, then adjusted total income shall be deemed to be total income of the person. AMT shall be payable through challan. Yes or no? Then if at all you paid AMT under 115 JC, AMT credit, you will get, what is AMT credit? Excess of AMT paid over regular income tax under the provision, that is called as AMT credit. What you will do with the credit? You will carry forward for set off up to a maximum period of 15 assessment years succeeding the assessment year in which AMT is computed. Correct? Okay, sir, I will carry forward. What I will do? Such credit can be set off against regular income tax payable. Full regular tax? No. Regular tax in that year which is in excess of exceeding AMT payable in that year. That is, an amount equal to AMT in every year must be paid by challan only. In other words, AMT credit cannot be set up with AMT liability in the subsequent years. It is just like an input tax under reverse charge mechanism. Yes or no? Now, sir, tax credit, no, can I even set off? Suppose I have a brought forward tax credit, sir. This year my adjusted total income is less than 20. AMT itself does not apply. Still doesn't matter. This year you have a regular income tax liability? Yes. AMT is not there. It's okay, no problem. Regular income tax is there, right? AMT credit is there. Set off. Yes or no? Tax credit is allowed even if the SSC is not claiming it. Sir, this year no deductions at all, sir. AMT itself does not applicable, sir. Sir, moreover, I am going for default tax regime, sir. If at all you are claiming default tax regime, AMT credit will be lost. If at all you are claiming default tax regime, AMT credit will be completely lost. If you are going with optional tax regime, you can set off. Sir, in this year, I don't have any deduction under 10AA, 3580, nothing. AMT provision itself does not apply this year, sir. Still, your regular tax is there. You can set off AMT credit. No problem. Are you clear? Very simple. AMT credit can be carried forwarded and you can apply set off against regular income tax, which is in addition, which is in excess of AMT tax in that year. Sir, in that year, AMT tax is 0, sir. Still, you can set off. Are you clear? Sir, I am choosing default tax regime, sir, in the second year or third year. AMT credit will lapse. Now, just come back to our beginning page. Just come back to our beginning page. In AMT, you know, here I will tell you, here I will show you. In the default tax regime, you see here, default tax regime. Okay, in the default tax regime, what happens? AMT liability, not at all liable for AMT. If at all SSC chooses, default tax regime, correct? Look at the page number 18. AMT credit, not eligible for to claim AMT. You can't claim AMT credit itself. That will lapse. Able to understand? All of you. That's it. Once you choose default tax regime, AMT credit will be lost forever. Why? You know, AMT credit is for whom? Business SSEs. AMT credit is for business. You know, there is one more reason. Sir, who can go for default tax regime? Anybody? But there is one logic. Sir, SSE does not have PGBP income, sir. I am talking about default tax regime now. Sir, SSE does not have PGBP income, sir. Happily, he can go every year. He can happily choose every year whether to go with default or optional. Every year he can choose. Whichever is beneficial, he will opt that year. But SSE, who is having PGBP income, you know, he must exercise this option, whether he will go with default or normal. Normal exercise, AMT provision is applicable. We will see all that. You choose default. You must choose it before filing IT return. Before the due date, you must choose that too. Sir, I choose a default tax regime, sir. Once exercised, all subsequent year default only. For example, sir, I want to withdraw, sir. Last year, I without knowledge, I choose a defaulter. I'm losing 35 AD all the benefits, sir, because I choose a default tax regime. I am losing all tax benefits incentives, sir. I'm losing. Okay, you withdraw. You withdraw. You can withdraw from the default tax regime. Which SSE I'm talking about? SSE having PGBP income. SSE having PGBP income, he withdraw. So can withdraw option only once and pay tax under normal tax. Yes, sir, I did. Sir, next year again I want to pay under default, sir. No, you cannot opt in. The business SSEs don't choose default tax. Go with optional. You choose in default. Pay only in default. You withdraw later. Forever you can't come back. Forever you can't. A business SSE came and choose a default tax regime. Later in the second year he withdrawn. Third year he withdrawn. Once earlier you declared under default tax regime and later now you withdrawn, you can never get back to default tax regime unless your business discontinued. Suppose you don't have a business income at all later on. Now you can again come back to optional default every year. Able to understand? All of you? Now look at this. Suppose I choose a default tax regime. AMT itself will not be there. AMT credit and all I will lost. Sir, I am not at all going for default tax regime, sir. Yes or no? Business SSE, sir. One time I choose, I am forever obliged. Or one time I withdraw, forever I will not have. So this is the risk I have. What should I do? Getting it? Happily go with optional tax regime. Pay alternate minimum tax, which is actually beneficial in reality. Are you clear? Everybody? Yes or no? That's it. So, you know, annual exercise of option of shifting out. Compute income under both the regimes. Choose the regime whichever is beneficial. This option is there for SSE who do not have business income. For business SSEs, this option of choosing every year not applicable. You choose in one time, declare forever. You want to withdraw later, withdraw, no problem, I'll give you, but one time withdrawal only. You withdraw, you can't come back into default tax regime ever. And once you choose a default tax regime, remember all your AMT credit, everything will be lost. Later again, you withdraw on default, you are going back to optional, that credit can be brought forward, you can't do it. Are you clear? That is the punishment given to SSE who is choosing default. So SSE who is having 35 AD benefit, 10 AA benefit, never they should go for default tax regime. It's tax advice I'm giving you. Tomorrow your clients, if at all they ask you, don't tell them to go with this. Are you clear? Now go back. Are you clear with AMT? Yes. Shall we do one problem on this? I will directly do the problem. Okay. Question number 12 in the total income topic. Fantastic provision. Question number 12 in total income chapter. I think this is TYK illustration. I'm not sure. You just see that. Okay. TYK only, I think. The illustrations, I think we don't have directly, all are TYK only in this chapter. Okay. Question number 12. Pause the video. You know, here they are asking, SSE is an individual. They are asking whether he should pay income tax on the default tax regime or normal tax, which means probably this might be his first year. So he is in dilemma. He is a business SSE. He has a doubt whether to go for default tax or whether to go for optional tax regime. He has a doubt. But remember, when he is going for optional tax regime, 35AD, 10AA, if at all these sections are there, he is liable for AMT also. But if at all he is going with the default tax, he can't claim any deduction. And he should pay tax as per default tax regime rates, and AMT and all does not apply. Correct? Fine. Okay, now let me compute. Pause the video, first you solve it. Okay, you solve along with me. Carefully you see. Mr. X, okay, an individual, he set up a unit in special economic zone for the year 1920 for production of washing machines. Okay, special economic zone, he produced washing machine. The unit fulfills all conditions of 10AA. Very good. During the year 23-24, by the way, he started operations in 1920. So, okay, during the year, we are doing problem for 24-25, 1920 first year. Correct? Okay, 20-21, 21-22, 22-23, 23-24, we are in the 6th year. He can claim only 50% deduction of the export profit. Remember that. Right. Next, in 23-24, he also set up, say, warehousing facility in the district of Tamil Nadu for storage of agricultural produce. Array, agricultural produce storage, warehouse, 35 AD business. It fulfills all the conditions of section 35 AD. Capital expenditure in respect of warehouse is 75 lakh, including land cost 10 lakh. You can claim 65 lakhs only deduction for building. Correct? You can't claim land cost under 35 AD. Yes, keep it. The warehouse became operational with effect from 1st April 2024 and expenditure 75 lakhs was capitalized. Oh, prior to operations, prior to commencement of business, 75 lakhs incurred. You can still claim deduction, provided on opening date of the warehouse, on opening date of the business, the capital expenditure must be capitalized in the books. A condition also satisfied. 35 AD deduction he can claim. Yes or no? Next, they have given some details. Profits of the SEZ, how much? 40 lakh. Export turnover received in convertible foreign exchange within 6 months from the end of the financial year, 80 lakhs he received. Export turnover means only 80 you should consider now. Correct? Domestic sales of the above unit 20. Total sale is what? 1 crore. Yes or no? Then this is profit from 35 AD. Okay, fine. That I will come back to it later. Profit from warehouse before 35 AD deduction they gave. That's it. Compute income tax liability including AMT, all that as per regular provisions, as per normal default, which is better? They are asking yes or no. Now can I proceed? Now I will compute PGBP income computation. Correct? First 35 AD income I will compute. Warehouse. How much is the income? 1 crore 5 lakhs. Correct? Yes or no? Minus I am eligible for 35 AD deduction. No. How much deduction I am eligible for? 65 lakhs I am eligible for. So what is my balance income? 40 lakhs. Yes or no? Array, all of you. Then what is my SEZ profit totally? So where I have a factory, I have a factory, How much is the profit? Oh, profit located in SEZ is totally 40 lakhs. That is fully taxable under PGBP, right? What is the total profit? 40 lakh. Gross total income means what? I know, sir. What about 10A exemption? After GTI, you should do that adjustment. Yes or no? How much is that? 80 lakhs is my gross total minus 10AA deduction. How much is 10AA? Sir, profits of the SEZ 40 lakhs. Exports is 80 lakhs. Total sales is 1 crore. Remember, total sales, they didn't give information. They only told sales domestically 20 lakhs. See, export 80. Total sales means what? Array, yes or no? Yes or no? 1 crore. So how much is the deduction? 32 lakhs. How much is the 10AA deduction? 32 lakhs. What is the balance? Total income how much? 48 lakh. Correct? Oh, wait a minute. Yes. 10AA. First itself I told. How much it? 50%. Very good. How much? 16 lakh only he can claim deduction. Correct? So how much is the tax total income? 80 minus 16. 64 lakh. Correct? Remember, if this question comes in exam, minimum 12 marks. Minimum 12 marks. 64. Okay, I will do one thing. First, I will compute income tax liability. Okay. By the way, SSC is who? SSC is individual, age not given, normal citizen I will assume. Yes or no? Fine. 64 lakhs, right? First I will compute basic tax. 64 lakhs basic tax is what? Very simple. Up to 10 lakh, 1,12,500. Correct? 54 lakh at the rate of 30% is equal to how much? 16 lakh 20,000. Correct? So total basic tax how much? 17 lakh 32,500 plus surcharge. Total income is exceeding 50 lakh. Surcharge is applicable at 10%. Yes or no? 1 crore 73 lakh 250. Correct? Subtotal 19 lakh 5,750. Yes or no? Plus cess at 4%. How much it is? 76,230. Okay. What is the gross tax liability? 81,980. Correct? That's it. Answer not yet over. This is tax liability under normal tax regime before considering AMT. Now I should also compute what? AMT liability, because SSC claimed a deduction under 35 AD and he also claimed a deduction under 10 AA. Now calculation of AMT. Correct? Until now everybody understood. Yeah. Now, before I decide to pay this amount, I will first compute AMT. AMT liability. Fine. First total income as per normal provisions, how much? 64 lakhs. Just now we computed. Correct? Hey, everybody. Add back 10 AA deduction. How much we claimed? 16 lakh we claimed. Add back 35 AD deduction. How much it is? 65 lakhs. But remember, immediately depreciation under section 32, 65 lakhs is building into 10% on 1st April onwards itself. Building is there, full year is used, more than 180 days, 10% full you can claim. 6 lakh 50,000. What is the adjusted total income? 64 plus 16, 80. 80 plus 65, 1 crore 28 lakh 38. 1 crore 38 lakh 50,000. Now on this straight away 18.5% tax, how much? Basic tax is equal to 25 lakh 250 plus surcharge at 15%. Why? Total income is exceeding surcharge at 15%. Yes or no? 1 crore to 2 crore surcharge rate is 15%. Yes or no? How much? 15% how much? 3,84,000. 3,84,000. 338. What is subtotal before cess? 28 lakh. 29 lakh 46,000. Okay. Plus 4% total. Tell me. Gross tax liability. Sorry, I will call it as AMT liability. Yes or no? How much is that? 30 lakh 64,000. 451. Amma, AMT is more than. You see, this is normal tax. AMT is 30 lakh. Since AMT is more than normal tax, if I go with optional tax regime, if at all I am going with optional tax regime, minimum tax payable is equal to 30 lakh 64,451. Agreed? Everybody? Now, since if I go with optional tax regime, this much tax minimum I should pay, and I am eligible for AMT credit. AMT credit is what? AMT 451 minus 19 lakh 81. 19 lakh 81. 19 lakh 81. 980. How much is the answer? 10 lakh 80. That's it. This is AMT credit. Correct? Fine. under normal tax regime I computed. Now I will go for default tax regime. Now I will go for default tax regime. Okay, how do I compute default tax regime? First I will see total income as per normal tax regime. How much it is? 64 lakh. Correct? Now since I am going for default tax regime, 3580 deduction I cannot claim, right? When I am not claiming 3580, happily I can claim depreciation, no, in default tax regime. Remember, I can happily claim 32 depreciation if at all I am not claiming 3580 deduction. How much it is? 6 lakh 50. Again I cannot claim 10AA exemption also, right? Array, how much I cannot claim? 16 lakhs. If at all I go for default tax regime, my total income, by mistake don't write adjusted word here. It's a total income under default tax regime. How much it is? 1 crore 30, 38 lakh 50,000. Correct? Everybody, now compute basic tax on this. We know very well, up to 15 lakh 1 lakh 40,000 tax. Correct? Up to 15 lakh liability. Remember, default tax regime means up to 3 lakh 0, 3 to 7 5%, 7 to 10 10%, 10 to 12 15%, 12 to 15 20%, beyond 15 30%. Yes or no? Up to 15 lakh 1 lakh 40,000 rupees only the tax. I think I remember correctly. 1 lakh 40 only will come. Up to 15 lakh, how much is the tax? 1 lakh 40 only, no? 1 lakh 12,000 optional tax regime. That is up to 10 lakhs. This is default tax regime. Correct only. Okay, it's okay. My instinct says correct. Go ahead. Up to 15 lakhs rupees worth of income, no, in default tax regime, the fixed tax liability is 1 lakh 40. Beyond that, how much is there? 1 crore 23 lakh 50,000, which is taxable at 30%. How much? 37 lakh 5,000. Oh, basic tax totally. Appa, 38 lakh is coming. Plus surcharge 15% applicable. Total income crossed 1 crore. Up to 2 crore, 15%, how much? Okay, 44 lakh 21,750. Okay, fine. Plus 4%, add final figure. Default tax regime tax liability. Yes or no? How much? 98,620. Array, if I go with default tax regime, I'm getting 45 lakhs. If I go with optional tax regime, 30 lakhs I'm getting. Moreover, I'm getting 10 lakhs credit also. I will go with the optional tax regime. Easy or not? I hope the numbers are right. I will see the numbers. Which regime it is? Default tax regime. 45, 98, 620. 45, 98, 620. Correct. Okay. Then computation of total income under regular provisions. 18 lakh 1,000. For us, how much we got? They did not add surcharge. Their computation is wrong. Surcharge they didn't add. 10% they are supposed to add. No. By the way, basic tax is right only, no? We computed basic tax right, no? Under regular income tax, you see, 17 lakh 32 500, right? Yes or no? That's it. They forgot to add. In the book, they forgot to add surcharge. That is where they did wrong answer. Clear? By the way, AMT, how much they got? AMT surcharge they added, luckily. AMT how much is? 30 lakh 64 450. For us also same answer, no? 30 lakh 64 450. Perfect. Then AMT credit minus this one is equal to the tax. Are you clear? That's it. They did wrong calculation in the book. Surcharge they did not add here. Here they are supposed to add 10% surcharge. Then 4% says this answer would have been different. How much this answer is actually? How much is this answer? We have computed just now. 19 lakh 81 980. Correct? 19 lakh 81 980. AMT credit how much? This you remove. 19 lakh 81 980. AMT credit is what? 10 lakh 82,470. Correct? 10 lakh 82,470. That's it. Easy. You know, we computed differently from them. First they computed default tax regime. then they computed tax, then they arrived optional tax regime separately. Yes or no? In default tax regime, first they did default tax regime. So when they're doing default tax regime, profit from cess they took, profit from warehousing full amount they took, depreciation they reduced, all that. Whereas when now then they arrived optional tax regime. So how they arrived optional? Oh, they did freshly again. Freshly again they did. So total income is what? 64 lakh, correct? So first they did default, then they arrived optional, then AMT. First we did what? Normal, then we did AMT, then we found out under normal, then part 2 of the section, part 2 of the question, then default tax regime. Since optional tax regime only with AMT, capital tax liability is lesser than default tax regime. Clear? That's it. So question number 12 is over. Everybody understood. All of you, I'm telling you, no, total income chapter is dead easy. Income tax is easy if you remember all the provisions. Any confusion until now? That's it. Okay. Now next we will see randomly, we will see some problem. Rosie Mary residential status related problem. Assuming both exercised option of shifting out of default tax regime, both of them are exercising option of shifting out, means optional tax regime they are choosing. Yes or no? You know what are they asking? Rosie and Mary are sisters, born and brought up at Mumbai. Rosie got married in 1982 and settled at Canada since 1982. Mary got married and settled in Mumbai. Both of them are below 60 years. Now you see, Rosie got married and settled in Canada. Okay, na? She settled in Canada. Rosie, she is a non-resident. Yes or no? Mary was settled in Mumbai. She is a resident and ordinarily resident. They are giving the following incomes. Pension from state government, taxable because it's a Indian income. Pension from Canadian government for Rosie, not taxable because she is a non-resident. Long-term capital gain on sale of land on 15th May. 15th May means before 23rd July, which means tax rate applicable on long-term capital gain is 20%. Yes or no? But anyhow, tax liability and all they are not asking, I think. Oh, tax liability they are asking. Oh my God. Here, crux. Here there is a crux. 1 minute. Just 1 minute. Yes. So I will compute income. Okay. Now I will compute income. Correct? Huh? So now look at Rosie, non-resident, Mary, resident and ordinarily resident. Yes or no? Pension amount is taxable for Rosie. Sorry, Mary. How much it is? 60,000. Correct? Huh? Canadian government pension she is receiving. Okay. For Rosie, nothing is taxable. Then they are receiving what extra? Long-term capital gain. Both of them 1 lakh, 1 lakh. Long-term capital gain. Both of them are having 1 lakh because they are from Indian company. Source is in India. Yes or no? Short-term capital gain on sale of shares on 23rd April. Here also both are before amendment. Indian listed company STT paid 111A short-term capital gain. Yes or no? 111A short-term capital gain. This is before 23rd July. This is also before 23rd July. This is taxable at 20%. This is taxable at before amendment 15%. How much is for Mary? How much is for Rosie? 20,000. Rosie 20,000. Mary 2,50,000. Both are in India. Yes or no? LIC premium paid. That is ATC purpose. Premium paid to Canadian Life Insurance Corporation. Where you pay doesn't matter. You can claim ATC deduction in India. Able to understand? Medical policy. Oh, this is chapter 6. This is chapter 6. Medical policy. Deposit in PPF. Rent. Rent received from house property. Rent received it is. Gross annual value it is. Yes or no? So house property income. How much it is? 60,000 for Rosie minus 30%. Net income is 42. Mary, how much she is receiving? 30,000. Just 30,000 minus 30% is equal to 21,000. Understood or not? Gross total income. Gross total income. 1,62,000. Here it is 1,60,000, 4,10,000, 4,31,000, correct? Minus chapter 6A deduction 80C. So Rosie, no, 1 minute. Hey, pension received, right? Yes, yes, yes. Very important observation. Pension received is taxable under salary. Flat 50,000 deduction. By the way, SSC is choosing optional tax regime. Flat 50% deduction. So which means only 10,000 is taxable. Very good observation. 60K minus 50K is equal to how much? 10K. Remember, when you are computing income from salary, they gave pension received, not computed income. Yes or no? So 50,000 flat deduction, standard deduction. So here it is 3,81,000, correct? Now 80C deduction you have to compute. 80C what? LIC premium paid. Percentage and all we don't know. We assume that it is within the limit. Yes or no? Then Rosie, medical premium also she paid. PPF, deposit in PPF. PPF is also 20,000. 80C. Medical premium paid. Medical premium paid by account to pay check. So eligible. How much it is? 25,000. 80D. Yes or no? Then Rosie, 40,000 she paid for life insurance premium. That she can claim deduction. Correct? What is the balance total income? 1,22,000. 3,81 minus 55. 3,26. Remember, both of them are normal citizens. Optional tax regime. Yes or no? And long-term capital gain they got right. Long-term capital gain, that is from sale of land, not an issue. Sale of land means no problem. Okay. Now you see tax computation. For her, no, short-term capital gain she has. Yes or no? Anyhow, let us compute basic exemption limit. She is a non-resident, remember. For non-resident, unutilized basic exemption limit concept is not applicable. Yes or no? Fine. So I am computing first Rosie tax liability. What is the total income? 1,22,000. In that, what is the capital gain income? 111A, 1 lakh. Balancing figure is what? 22. Since it is less than basic exemption limit, zero tax on normal income. Sir, unutilized limit is there? No. Can I set off? No. Residents only can set off. Resident individual only can set off unutilized basic exemption. Now this is taxable at 15% flat rate. This is taxable at 15% flat rate. How much is the tax? 15,000. So Rosie, basic tax is what? Just a minute. No. Before amendment 15%, 111A. For her, long term, this one. Okay. She has, got it. Understood. Okay. Which means 3 income she has. This means she is having 3 incomes, correct? 3 income she is having. Okay. You should have told me that information. I thought only one gain is there. Okay, fine. 1,22,000, right? Long-term capital gain, how much? 1 lakh. This is before amendment she got, before 23rd July. Short-term capital gain she got. This is taxable at 20%. Sorry. Before amendment 15%. Before amendment 20%. Balancing figure 2,000 only. Correct. Balancing figure 2,000. Because she has 42,000 income from house property. LIC 40,000 is there. Able to understand? So entire 2,000 less than basic exemption, 0. Now long-term capital gain she got before 23rd July. We all know long-term capital gain tax rate is 20% if it is before 23rd July. 20,000 basic tax. Short-term capital gain 3,000. Total basic tax is equal to 23,000 plus surcharge will not apply. Education says 23 minus rebate. See, total income is less than 5 lakh. But rebate is not applicable for non-resident. 87A rebate is not applicable for non-resident. 4% is equal to gross tax liability. See how many complications are there. Small problem, but you see the complexity involved. So how much is that? 23,000 plus 4%. 23,000. That's it. This is Rosie tax. Mary. Now we'll compute for Mary. Mary total income is how much? Mary total income is how much? 3,26,000. Antena? Correct, no? 3,26,000, right? Is it right? 3,26,000. Now, normal income is how much? Special income. For Mary, no, capital gain long term is there. Short term is not there, no? Short term is also there. Oh, both are there for both of them, huh? Okay, 1 minute, just let me check. Oh, short term 2,50,000, ah, long term 1 lakh, ah, okay, so big, okay. I think we did something wrong here. Hey, wait. Remember chapter 6A deduction when you are claiming. This is not eligible for chapter 6A. Chapter 6A, total amount is what? I told you, every checkpoint you should not take it granted. Luckily in this problem, since 350 is there, allocation 381, I could figure out that there is a mistake. But normally you can't figure out. If at all bigger amount is there, you will be doing wrong answer. Always follow the system. Whenever you are claiming chapter 6A, immediately checkpoint. How much of this is normal income? 31,000 only there. How much is there? Total chapter 6A deduction is very good. Now total income is exactly. Now Mary total income is what? 3 lakh. 3,50,000, correct? Now remember, she got entirely special incomes only. Long term capital gain before amendment she got how much? 1 lakh, which is taxable at what rate? Short term capital gain 2,50,000, which is taxable at. Now fantastic observation I will tell you here. Now basic balance is 0, but she is eligible for 2,50,000 basic exemption. I can set off this. Because long-term capital gain is taxable at 20%, I will first set off long-term capital gain. Yes or no? Now balance still I have 1,50,000. That 1,50,000 I will set off here. Still I have balance long-term 0, balance short-term 1 lakh. Remember, if at all the capital gains are after amendment, 23rd July, if at all the capital gains, then first I will set up 2,50,000 with 2,50,000, which is taxable at 10. This is taxable at 15. Sorry, this is taxable at 12.5%. This is taxable at 20. If it is after amendment, that time I will set up with this, because I have higher tax here. So I will use exemption for higher tax income. Understood the logic? I was thinking somewhere it should come problem. Luckily it came here. Okay. Then 1 lakh multiplied by 15%. So how much is the basic tax? 15,000. But remember, plus surcharge. How much is surcharge? 0. So 15,000 is subtotal plus cess. No. SSC is a resident. Yes or no? Total income is how much? Not exceeding 5 lakh. Remember, rebate will not come under 112A income. Here 111A she has. Not 112A is not there. So don't worry. If at all 112A tax is there, you will not claim rebate to that extent. Now maximum rebate, optional tax regime 12,500. Yes or no? So balance tax is what? 2,500 plus 4% is equal to fantastic provision 2,600. You see, such a complex problem. Yes or no? By the way, answers right? That you check first. Amma, thank God. 2,600, 23,920. Both are correct. Thank God. Are you clear? All of you? Since I remember entire provisions, I able to recollect everywhere. One provision at chapter 6A, I directly applied. If at all the problem, that number is bigger, no, I would have not discovered the mistake. At the time of tax computation, 350, is that special income 326? How come it is? Immediately I found out. Yes or no? Not every time you will be lucky like this to find. Able to understand. Every checkpoint, follow the system. Fantastic problem, no? So many observations are covered everywhere. That's it. Clear all of you? Yes. We'll take 5 minutes gap and then continue.